right, I think, let's see if we're live. Okay, I think we're running. All right. Hello, everyone. Uncle Jocelyn, Power and Profits. Grand evening to everyone on this, what we consider to be the preseason to the stock market, right? Every Sunday, we have our own preseason, so to speak, where we're kind of excited, for the next day to come, which is Money Monday, as I like to call it. Money Mondays are the right way you kind of start off the market, particularly, having a game plan, and that's to be able to get after some of this opportunity, right? Because we look at the market as an opportunity, liaison, so to speak. And so anytime it's open for business, we're ready front and center. So with that being said, again, I want to say, good evening to everyone. Can you guys hear me? Sound check. 1, 2, 3. Can you guys hear me? I'll do a quick little sound check. So I do have my earphones in. I want to make sure you guys can hear me. Can you guys hear me? All right, everybody say sounds good. It's loud, it's clear, it's thorough, it's lucid. It's it's like what they call the Bose speakers, right? Does it sound like Bose speakers? All right, the clarity. All right, so good. So again, I do want to welcome you all again, family, friends, the whole nine, constituents, business partners, the whole gauntlet. Y'all know how we are. We are a unique group of people coming together under the auspices of opportunity, financial freedom, and one of the many tools that we use to get to that, that space or that conquer that reality is the financial markets. And so every time, we go live, in essence, to do one of these sessions, my mind and my energy is geared towards being able to potentially bring forth the best energy and information that we can to make this stuff a little bit more clear and plausible to our opportunity, that's before us. So let me also get the link, because y'all know I'm a very workshop-minded kind of person. I believe in hands-on type training and also building and bringing forth information. So anytime you can have, different thoughts, different vantage points, so to speak, when it's dealing with the market, those are always a plus value. So I enjoy that kind of level of engagement. So let me grab the link real quick here for everybody that wants to come on to the live stream itself. You guys can. Again, just, obviously I know we know how to work in tandem. So just make sure that, when you are, when someone else is kind of building on something, you kind of wait your turn unless you're going to interject, or however, we do this stuff with a level of, order and organization in the same light. So here's the link, guys. If you do want to come on the panel live as well. Matter of fact, I actually employ you all to come on, because again, it makes for a great environment when you get a chance to share your advantage, again, your views of the market, in a particular, stock, asset class, or whatever that you may be looking to trade. Might want to share some info and knowledge on that. You're welcome to be able to come and do that. Right. So again, real quick, do a quick little house call, a little roll call, so to speak, as I call it, housekeeping. But we have the family Adjective News in the house. Good to have you in the house, family. Or is it just Adjective? Okay. Unique name. I like that. We have the family Zishan in the house. Good to see you, family. We have the lovely E of Monica Lamb in the house. As always, power and profit to you. Financial guru herself is in the house. We have Oba Gordon Gecko in the house. Good to see you, family. As always, tearing it up as late. Always is, getting it in, laying the groundwork for a lot of people to follow. We have the family Steven in the house. Good to see you. As always, power and profit. We have the family Brandon Jimmons in the house. Good to see you, Oba. As always, power and profit salute. The family Jerry Pruitt. I see you, family. Right? Power and profit to you as well. Mr. Bullet, I see you as well. Power and profit to you as well, Uncle Jocelyn. The lovely Iya Bagainer in the house, guys. Good to see you. The lovely Camille Iya Bagainer, as we know as Drumette. Sister Drumette is in the house, right? World-renowned drummer, all right? Always want to big up that sister and her talents, right? Always getting in. The sister tours around the country. She just lately came off a tour with Diana Ross. So if you guys definitely want to follow some, unique live jazz, the whole nine, you might want to subscribe to that sister channel as well as everybody. You know me, I'm a very, village kind of minded person. I enjoy everybody because all of us has unique talents and gifts that we bring to the fold. And one thing I love about the market is, no matter how many, how much, education you may have or how well skilled and trained you are in some kind of specific profession outside of this, we all come together like elementary students when it comes to this market, right? Because again, it's about the money. It's not about what how much education you got, what I don't know how many times you travel to the moon. All that stuff is fine. You could be astrophysicist and all that, but at the end of the day, if you still can't look at the market for what it is and find a way to crack the nut and get to the meat, then you just like everybody else, just a well-trained person, right? But this is a whole new different animal when you're dealing with the financial markets, and we all know that, right? Because again, it requires some real serious, chess kind of values that you have to bring forward, meaning chess playing kind of reality. So again, with that being said, we also have a few families just popping in. We have the family JL Turn that came in the house. Good to see you, Oba, as always. Power and profit to you. Oba Caesar just popped up. Good to see you, family, as always. Power and profit to you. Good to see you as always, right? The family Jeremy Collins just popped up again. Hey, always, love to see you guys in the house, man. It gives me that kind of energy. Oh, my family Mateo. I didn't even see Mateo pop up. I missed his name. Mateo Trade in the house. Good to see you, family, right? Old school from the old house, right? We call old house of trap trading, if you want to call it that. Good to see you, family. Power and profit to you as always, right? All right. So again, the link is in the description box, guys. If you do want to come on, I definitely would like for you guys to come on and share, because some of you guys again been tearing it up lately. Some of you guys been deep in and study and have grown exponentially. During that time of so-called maturation in your process of learning this market. And it's always good to kind of see where you guys are now in terms of how you again walked yourself into where you are today. And I love to hear those kind of testimonial stories, and so to speak, because it's invigorating, it's energizing, it's letting people know, hey, anyone that has a will to want to learn this can actually learn it, because we actually are part of this value, whether we like it or not, as consumers. So you're actually a part of the fold anyway, right? So I say, well, why not invest or learn how to invest in a way where you can benefit twice, by enjoying the product or the service, but also get a chance to get some kickback through the value of an investment, right? Investing in the company, right, and watching them grow, objectively the way they're supposed to, so you can get you some organic growth off of their growth, right? Which is the best way to again acquire wealth in life, is learning the power of using the village mentality, right? Everybody's feeding off the hot, what is hot, and what's groomable at that time, so we all can benefit from it. And so again, I just want to premise it, by always saying that again, it does take a village. That's why I'm always saying Ubuntu I am, because we are. I don't claim to be a guru. I don't claim to be some person to put on the pedestal. I'm just like everybody else. Got my irons in the fire, trying to see what I could do to turn make $1 out of 15 cents. That's what we used to say when we were little kids, right? And so what are you doing? Trying to turn make $1 out of 15 cents. So and literally that's what we do, especially when we trade in the options markets. We take these little contracts. Some of them sometimes they worth like 15, 20 cents, $15, $20 basically, and then they easily in the right circumstance could turn it basically $100, $200, $300 like it ain't nothing. And again, that's what's exciting about this opportunity as well. So with that being said, you guys can see down in the description box, you see the kind of information that I have on deck for today that we're going to speak about. I'm pretty sure some of you guys have already had the chance to at some point do a little weekend blitz and seeing what the news is, what's popping in the news arena, be it international or also local, whatever the case, because again, there's also local values of news that affects the over aspects of the global market in itself, because they may have a prize value of knowledge, information, or product or service that obviously carries a lot of weight going into the market. And so there's a lot of things that we've witnessed over the past week when we look back in hindsight, or we do a little reconnaissance in terms of the market, where when we're looking at the market's at all-time highs, and it's just slowly grinding up on this uncontrollable melt up, and there's not necessarily a whole lot of organic catalyst value to kind of cause that. It's just more or less the Feds pumping money into the market. Basically, that's what they're doing with the repo market, and also quantitative easing, that they dare not call it quantitative easing, but that's basically what they're doing. And in conjunction with the value of them cutting rates, right? We're basically into the third federal rate cut in this one fiscal calendar year already. And obviously Trump even wants more, right? He's literally wanting to take interest rates to zero, right? Or negative zero if he could. right? Which is very problematic in terms of our market and comparative value to all the other countries around the world, right? Because again, you can't say on one hand that the market is doing good, the economy is doing good, your American people are benefiting off some of these tax cuts and different plans that are put in place under his, cabinet value, yet you're screaming for rate cuts at a level where it's seeming to be alarming, right? The only time you're really cutting rates if everybody else is, really, really at a point where there's no growth around the entire planet. Obviously, America being kind of the liaison of a lot of things in terms of import, export, policies that affect everybody else, this, that, and the third. We have the biggest market, basically in terms of on the global aspect, everybody wants to invest in American markets. Well, still at the end of the day, these are for emergency purposes, right? So every time you do a rate cut, you're pretty much just lessening yourself for one lifeboat or one life preserver off, so-called speed on, quote unquote, the Titanic, right? Whether you want to use that analogy or you don't, but we all know the story of the Titanic, right? So we starting to shed life preservers and lifeboats already, and we haven't even got to the point where we even seen the iceberg. That we might be a little too premature. In some cases, it's just lowering these or cutting rates at this level when it's not necessarily warranted if again the economy is doing good. And we base that by what a lot of the other studies that are put forth out there in terms of CPI numbers, PMI numbers, jobs, all the kind of stuff that we kind of look at, from week to week when they're putting out these daily reports of the overall kind of report card of what the entire market is doing, manufacturing numbers, the whole nine, right? We kind of see what a lot of our counterparts are going through right now because of the value of the trade war in terms of what, stagnant growth. Again, China being kind of the antithesis to our market at this point, even though we trade, highly in tandem with them, them being kind of the second, largest global economic market on the planet, we have to still realize, their place in this food chain too, right? Regardless if you want to kind of, harp on them being a communistic country or whatever, it doesn't matter in there because at the end of the day, they're still, very capitalistic in their own right. I mean, they got some of the best. Basically, if you want to put them in essence to what we say Fortune 500 companies, they have some of the best Fortune 500 companies on the planet in terms of what they've been able to produce under their own economy. And they have the head count, meaning the populace, to be able to consume their products and services, even if they decide to cut their borders off from everybody else, and they can still thrive, right? Because they have such a heavy populace that feeds off these different technological advances, this, that, and the third. Right. So again, at the end of the day, we need them much as we claim we don't. So don't get caught in that talking point when people always saying, man, screw China, this, that, and the third. Well, I always say, it's a very simple scenario. Go through your home, all right, and show me products in your house that's not made from China. At least a minimum of 30-40% of your products in your home are probably made from China. So until we start, ratcheting back up some of these manufacturing plants and, cracking up with some of these small businesses, start producing American products, and don't try to charge people arm and leg for them, then we can't necessarily make that complaint. And also that, in essence, if you even try to put some of that boatload on Mexico, well, they can only do so much, right? They already got car plants and everything else going on down there. And they're trying to be able to also meet the demands of, the American consumer, because we consume more than anybody else on the planet, right? It's not a secret at this point. Everyone knows that, we are the decadent culture. We are the, if you want to call it the greed culture, we want it when we want it, how we want it, right? And we don't like to wait around for it. So, again, at the end of the day, we have to also be honest with ourselves and realize that, if you mess up that supply chain in some essence of any kind of value, especially now we're dealing with in terms of the trade war and tariffs, then there's going to be a shortage or a delay or some kind of issue where we have to kind of find another way. And so that's basically what you got pretty much of all of 2019. We know 2018, basically about the second half of 2018 before the tariffs really became a real big headwind for the markets and these companies. Now it's pretty much on the table. I mean, there's no organic growth. All of 2019 has been producing basically no organic growth. It's been pretty much been buybacks and Fed pretty much just kind of imbalancing or kind of stepping in and filling in the imbalances of why people are doing more buybacks as opposed to putting money into capex, meaning capital expenditures, meaning putting money back into the company to grow out their products or build out their businesses or services or whatever they're offering, and and then making a fair profit off that. Well, that has not happened pretty much all of 2019. I read an interesting study, I think I want to say last week, where it was pretty much diagramming the fact that for every time you hear the White House, whether you Trump or you're not, again, I don't make it political in that perspective because obviously I don't share no political party, but we kind of pretty much heard them religiously say, the economy's doing great, we booming, but the companies' earning reports have told a different story, right? We've seen revisions guiding down on a lot of these companies. I mean, your major names too. Obviously, we know the whole issue with Boeing, but Apple, Netflix, everybody else, they've just been constantly guiding down, right? The numbers of taking a hit, left and right, be it all shooter terrorists, or the fact that the consumer has hit a point where they're kind of reading the apex now, where they're not necessarily kind of doing any kind of extra. You would think from what they tell you on the news that we're just constantly buy. But I don't think that'd be the case. I think some of those numbers are false based upon the premise of things, how they're basing it in terms of what products we're buying, right? I think, from my basic study, I think it's just still the usual consumer staples, right? We talk about, things that we normally would, like Procter & Gamble is doing good because, again, you need toothpaste, right? You need stuff like, soap, washing powder, ubiquitous items that we need on a daily basis to survive, right? If you want to say, or use those things as a benchmark to say, well, this is why the consumer, the American consumer is spending a lot of money, then possibly yes. But we talking about lavish things, right? When you really start thinking about, people going out buying, $50,000, car, truck, when they necessarily, don't see, the need to have that because, they trying to be conservative in their dollars. And again, they also base it by the housing market, right? Well, we know that the housing market was heavily in trouble until basically, I would say the second rate cut we got, that really helped the housing market kind of turn around a little bit because they were tanking. I mean, we saw some of the, the tickers like KBH Home, the housing index, index, ETF, all those, Lennar. I mean, there's plenty of them. So you guys, Toll Brothers, y'all know some of these housing components, even industrials, right? We think about industrials, right? In terms of building materials, things like that, they were taking a hard hit. Lumber liquidators, even Home Depot, Lowe's, some of those stocks were getting hammered around the second quarter of this year. Right. And they just now, kind of somewhat starting to come around a little bit. And that's because the Fed has been easing. Right. We know at the end of the day, they just been stimulating the market with a lot of money. They've been printing more money, basically. Right. I heard Tony Dwyer. Some of you guys may not be familiar with Tony Dwyer, but Tony Dwyer, economist for, I think he does Cantor Fitzgerald. He's one of the lead guys over there. And his talking point pretty much is that, the people who's printing money, is print, basically whose job is to print money is telling you that they're going to print more money. Basically, in layman terms, he's saying, long as the Feds are constantly printing more money and injecting it into the market, stimulate the markets, then we're not going to fail under that auspice, and they're going to keep this 11-year bull run in tow, long as Trump at this point don't do anything kind of crazy to offset or counter that balance of what they're trying to do in stimulating the market to keep it the bubble inflated. It's obvious at this point that we're trading at some all-time highs. We at the nosebleed section of your favorite football stadium, right? We way up there, but we can't even see you unless we have some binoculars on, and you up there screaming loud as if they can hear you down on the football field, right? That's pretty much what the market is at this point, right? And you think, just by idea that you have the seat that high up, you got the best seat in the house. Well, that's not necessarily the case. Right, because there's a lot of things you're missing out on by not being closer down to the floor of the action, and there's a more realistic, value advantage point that you get from being closer to the football field itself. So when you think about it from that perspective, even though we've benefited off some of these, the profits that we're getting with the market being this high, well, it comes with a lot of drawbacks too. Again, it comes with the value that a lot of these companies again have lowered their guidance values a lot. And they're scared to actually reinvest some of that money back into the company naturally to produce organic growth. So that's why, buybacks was a big issue all of 2019. Actually, to be exact, starting from fiscal, maybe third quarter of 2018, when it really ramped up, that they just went on a buyback spree, and people just buying back shares, basically passing that tax burden off to the shareholder. And that's basically how they got over. People don't understand that anytime they're doing buybacks, as opposed to raising a dividend, giving you a real free check, they're putting you in a bad position, because now if you get a buyback and the stock runs up additional 2, 3, 4%, 5%, whatever the case, you would actually have to sell your position or a portion of that to even benefit from it, right off the injection of them buying back shares and obviously taking away shares from the float from the shorts and all that. you still have to sell your position or portion your position to take advantage of the opportunity. If not, and if you do that, you got to pay the tax on that. So what true advantage you get from that more or less than just kind of bumping up the share price? And then you still have to worry, hope that nothing happens, inside of this kind of, this free fall that they're doing, a pump in the market, that, you don't return to a point where the market, where your shares, pretty much came back to a standstill and didn't really get any natural growth and over, entire year of trading based upon buybacks and all this, that, and the third. And so again, there's a lot of things that we got to think about, right? And I'm pretty sure you guys have thought about this stuff. You kind of weighed your pros and cons about this and this and that, and how to hedge yourself, obviously being up this high, and so a lot of things I like to kind of keep in mind is that, when we're thinking about, different asset classes in terms of trading options, again, if you're just doing regular equity trading, again, how to be balanced in that in terms of lessening your position, so to speak. If you got maybe a RAI account, IRA account, Roth, whatever, I'm about to say RS, right? You can also, trade, and through that perspective as well as a side value to kind of make a little bit on the side here and there as well. I mean, there are different ways you can kind of get to this bag without necessarily kind of affecting your major accounts that you may have long-term positions on, right? So again, it's a part of what we do in terms of this business, in terms of how we have to be very knowledgeable and expand our thoughts, so we don't become, too myopic and trade only one direction, right? And there's nothing wrong with that when you first start learning. We all know the whole bullish thesis. We all came in as bulls. I rarely find somebody that come into the market that have no knowledge about it, and day one they're saying, I want to be a bear, right? That's very rare. just ponder that for a moment, right? And I know, it's funny when you think about it, because you're like, well, man, what would make a person just come right out the gate and be contrarian to the market when you just see all this potential money that could be made, especially when you look at the historical context, right? We're talking about 2008, 2007, the last major crash we had, right? When the S&P and the Dow and the NASDAQ and everything else pretty much was in the dumps. And then since then, it's just been on the tear, right? I mean, crazy gains, the amount of money people have made, well over, 4-digit, percentage value gains in that period of time, and again, all the stocks that actually IPO inside of that time frame as well, that has also taken off in lieu, because now it caught a bandwagon, so to speak, into this bull market, and they're doing fine. You think about what Facebook, right? Facebook IPO, 2012, something like that, 2016, 12, was it 12? I could be wrong, somewhere around there. And look what Facebook is in today, right? And then you got others like GoPro, right? GoPro went from pretty much peanuts to a honeymoon overnight, and then it came all the way back down to earth and having this reality moment as we speak, right? It's pretty much been left for dead, right? So again, it's just so many different facets of this market that's exciting, right? And every time I get a chance to sit in front of the screen, to assess it, to analyze it, to do my due diligence, whatever, it's like, man, opening up a Christmas present every day, right? It's exciting for the value that, we're all sitting here now. If you're not actually trading the futures market, you're like, man, I could be getting to the bag right now. I can't wait to get to the bag tomorrow, right? So again, that's why, we want to be also diversified in asset classes and learn how to trade crypto or whatever, different asset class out there. Forex, right? We have some sharp people that trade Forex as well. And so they can really bring a lot of information forward to help, bring us to that, to that level as well. So there's so many things that we can do and learn from being solid. So we have our first fellow that came into the house. Let me add you to the screen. Let me unmute your mic.
Hey, what's up?
Hey, what's going on, brother? Chaos Reign. So again, I know thank you for coming on. Number one, I know it's kind of intimidating sometimes when people are like, hey man, come on to the live stream and build with everybody. But y'all know, in terms of what we do as traders and investors, this is the most, conscious friendly environment you can ever be in. Right? It can be competitive in some aspects if you have that kind of energy, but y'all know I go out my way to never produce that kind of value. I enjoy the power of a think tank where people can come together and share ideas that make us all better at some point. And so again, I'm happy to have you on. So what are you seeing in the market right now? That's has you excited or have you a little trouble at this point?
I'm gonna say I just came up because I saw it through the the group chat, and then I noticed you pop up. I guess you're live right now on YouTube. African, Emporium?
Yes.
It's funny I get no notification. I'm not sure if YouTube unsubscribe a lot of people.
They have. I heard lately that they've been doing this kind of shadow ban, or they're doing a revamping of that, where they kind of so-called kicking off old accounts that they think either are fake or not inactive. And so what happens is that you have to go back and subscribe to a person's channel. I've been hearing that lately. So it's weird. Who knows?
Unfortunately, because as you know, this is my channel and I have content on this Chaos Rain channel. That if they are doing that, they're doing that for a bigger reason. And I think the bigger reason they're doing to you, because depending on how long you've been doing YouTube content, that you are talking about marketing values from a African perspective, or just general perspective. Yeah, they'll do that, because a lot of people that tune in that's not a trader. Because I learn, I'm not trained right now, lady, but I'm still just learning as I go. That they could start doing that. Besides people that have a greater channels, they won't do that much. But if you're like not like an actual official channel, and I have my definition of what is an actual channel, that they will start doing that. And people that follow you and take on to your energy and your understanding of the markets, people gonna have to resubscribe to this channel. And it's good that you're still doing it, African Emporium.
Hey, I'm honored, man. And my mentality. If you ever followed me, or I've been in certain different environments where you guys have are in terms of getting content or being on different platforms, my energy is always the same. How can we use these platforms to benefit one another in a value where it's to find the odds, it's to find the status quo, it's to find all this kind of all this blockage that sometimes does happen, just like you said, in a way where it's kind of kicking back those who want to be a part of something great. They're limiting them from being able to do that. Well, we got portion of that information that came relevant under the Facebook reality, right? We know Facebook has been, in all kind of trouble lately because of how they're, kind of playing this tit for tat game, and they're playing this, overseer kind of mentality, blocking certain people, not blocking others, then turn around stealing your data, selling it to other people. So, I mean, they run an entire racket over there, if you ask me. Just learning how they've been able to do this lately. And now you got companies like Google, who's also now under fire for doing the same thing, right? Turns out they were all doing somewhat the same thing. Right?
They all
I know it's still probably a young market
in California. They're all located in California, and this is what I've concluded: anytime any small platform that people invest their time in, and they eventually start to be on the stock market, that means eventually in time they're going to be corporate, and eventually they're going to start now control the narrative by putting rules and regulation because they're paying them. You know what I'm saying?
Right.
Just like YouTube was just small, and eventually in over 14 years, well, actually it's 15, but actually 14 years now, even when it was bought by Google, is now what we see it now. And it's going to be more heavy censoring for real information, because this is no longer a platform that, depending what person's what they brought to YouTube, what their mission was, is totally changing now. And it's gonna come to a point where most of us gonna have to have our own websites and have to grow wherever artists we have. They're going to have to come to these solo proprietary sites now, because these major platforms, they're not gonna cater to this information more. The more commercialized it becomes, the more hard people are gonna find the real information. And it's pretty evident once somebody controls and commercializes it, you're going to be getting just products and misinformation moving forward.
What's interesting that you even speak on that too. Again, I know we kind of sidebar, but that's why I love these conversations, because again, these are all things dealing around, growth, especially when it comes to startups, opportunities as a whole. Because that's my basic thesis is, where's the opportunity, right? And coming from an extensive marketing background, I've been traveled, worked in corporate America, been military, all the whole nine, college, all that. You kind of understand when you really hit a point, or you have that crucible moment, right, where change is about to really explode. That the one thing that we wake up for every single day is opportunity, right? Even if you still kind of on a clock mentality, you're constantly still looking for that next big break, either promotion or to be able to find your way to a better reality. And so I put it in layman terms that we're just constantly looking for opportunity. And we know that there's a value where a lot of that stuff is not probably equally yoked, if you want to use that terminology, because we're still dealing with the value of trying to, figure out, what's the real true mesh in this country to really empower it and get it to that next level, especially if you're thinking about in terms of historical context and, how, different empires have reigned for so long, and then they fell off because of greed and this, that, and third. I mean, history tells a lot about what happened in the past, where you don't make those same mistakes. But ultimately, in the end, we're still trying to get through a lot of the things that has crippled, in my opinion, a lot of the economic value and boom in this country, because again, people still, kind of, greedy in a lot of ways and not necessarily sharing. And so I'm segued to say this. I was watching CNBC even last week. They brought on the rapper. I know you guys familiar with the rapper named Chameleonaire, brother out of Texas.
Okay. What about him? How's he been doing?
He's super, super sharp. He's been on a campaign like crazy, where he started this pretty much this business that goes out and researches a lot of new startup companies to invest in, and he's bringing them back in a portfolio value to share them with African American entrepreneurs or venture capitalists, whomever that may want to be a part of that reality. And so he was on there speaking about a little bit of it and different companies that he's invested in. Some of them are well known. Like I think he's invested in I want to say Rob Hood. I could be wrong. I don't want to mess it up, but you can pull it up and see for yourself verbatim. But either way, again, having an opportunity like that or a liaison like that is phenomenal, right? Even more so the fact that now that so many of these companies now are starting to try to go public, in essence, to get to the market real fast, take advantage of some of the public dollars. They've now started, better ways for even the lower guys like us to come in as shade tree kind of, venture capitalists and get in on these companies like Start Engine. Start Engine is a great site to patrol. It's going to patrol or troll, if you want to call it that, to look for different products that you can invest in early before it, goes live. I've invested in several companies, right now who are yet to go IPO, right? But they, obviously they've shown a lot of great, opportunity and so forth. And these were fraction values, right? We're talking about Class C, Class A shares in some cases, some with voting rights, some without voting rights. But I'm still coming in at par values of 10 cents, $1. In essence, you wouldn't have been able to do that unless you was a accredited broker, right? We're talking about Series 6 license or Series 7, to that degree to be up, up the food chain where you can take advantage of some of these opportunities. Now we can, right? The whole reality with Kickstarter, right? Indiegogo, right? You can fund projects now. And so there's a lot of ways where the people have found a way to take back some of that investment power, where before it was kind of, isolated to a few, and now we get a chance to benefit from it. Now, I'll say all that to say this. All that stuff is fine and dandy until we have to utilize it. We can't just sit there and hear about it, know about it, and don't utilize it, right? Because it'd be just like anything. It sounds good, but you have to actually put some of these things in practice. And it goes back to what we do in terms of the market, right? This is a hands-on reality here, right? It all sounds good in theory. It looks good in hindsight, but until you actually engage in the market, again, that's when the real rubber meets the road, right? The real opportunity presents itself, not so much the fact that you get to invest in the market, but when you actually put money into the market, right? Because we're thinking long-term here, right? We understand there's a marathon. All right. So you say, well, I may have a little investment, knowledge, or I may not, whatever. But one thing we do realize that the goal at the end of the day, in terms of what, how capitalism really works for that perspective, being we here, is that only way you make money is you have to what? Spend money, right? So they say scared money don't make money.
It takes money to make money.
Exactly. So I always tell people it's a very simple thesis. You have to put your money to work for you, right? You have to find a way to put your money to work for you. It's a resource, right? It's a debt note. It's all these different things except what we've been kind of conditioned to think what it is. It's a tool at the end of the day. It's like, again, a construction worker that goes to work without his tool belt. Well, he's going to have a hard day, right? He's going to have a hard day, right? And so the same way we think about financial literacy and growing money to get to a point where we can say, well, we're trying to be a part of that wealth class, right? That 1% of Americans who's making a certain sum of money, right, in a different tax bracket where they're kind of comfortable, so to speak. Well, how do you do that without necessarily having to spend 8, 10, 12 years of higher education, going into debt to kind of find a way to get out of debt, right? Well, I can assure you that a majority of our parents, friends, and whomever, family members, whatever, never really came to us in a lot of ways and brought us this information about what? Investing. Or even are probably not even at the level where we really can comprehend it or should have comprehended it. And you think about when you look back in hindsight, if you learned this when you was in high school, really learned this, not just having it in economics class, where would you be today, right? And see, that's the one, again, that's that epiphany moment. That's that aha moment. That's that crucible that we know now, because now we actually engage in this market. and we're looking for opportunity. We understand how policies work now because it's all intertwined. It's government, it's corporate, the corporate sector, and the private sector. It's government sector. It's all these things. The international market as a whole. You put it all together into one, one bowl, and you produce, again, a great dish from it by learning how to mix all the right ingredients together. Right now, you're doing this the way you're supposed to. Right, as the entrepreneur who realizes, what everything else, entails that you have to be privy to in terms of you have to make sure that you understand the global market as a whole, product, services, how stuff works in that perspective to be able to invest properly and not feel like you got to go out there and work hard for it. Right. And so we use these different, vehicles through the different assets, stocks, whatever, Forex market for some of our Forex traders in the building tonight, crypto assets, whatever the case, even real estate. Again, it's the same reality. You're putting your money to work. Right. In some case, a real estate agent still has to spend some of their own money to even attract clients. Right. They have to do, all these different things to kind of woo that client to kind of, to earn their business. Right. And so it's the same reality, it's the entrepreneur energy that we strive for every single day. We just use stocks. Right. And some of them could be as cheap as 30 cents. Right. Some of them can be as expensive as a share of Google. Right. A share of Amazon, and there's $1,700 stock. Right. There's stocks out there cost more than that. Right. The most expensive stock trading in the U.S. stock market right now is Berkshire Hathaway. Right. We're talking about $250,000 for one share.
$250K for one share, right?
Exactly. Right. Imagine buying a share.
Warren Buffett was very smart because he is one of excellent investors, especially here in this country. Obviously, it makes sense why he would make his stock so high because he don't want anybody to own a piece of his corporation. He wants, the people that got actual capital put up,
Right. Well, again, that's a way to, wean out, the real from the fake, so to speak. Price your product in a way where, again, you're looking for looking to attract that kind of investor who really understands, your goal, your vision, and what you're trying to do, and trying to keep your product from being overly saturated, obviously diluted in terms of that. We all know anytime you hear about share dilution or offerings, that's an opportunity where they're going to dilute the share count, make your money less potent for you. Right. The whole issue even surrounding what we're dealing with in terms of trade war and tariffs, this, that, and the third, where in some cases you hear the White House say we're trying to, bring the price of the dollar down so we can compete on a global level, because if the price of the USD dollar is very high, well, guess what that does for all the other products who are a lot cheaper, right? It prices them out of our market. That's why the Forex market had been going all over the place, early in the year, because a lot of these, moments like this when the dollar was still just so high and everybody else was so cheap, it was pricing them out of our economy, so to speak. And so a lot of these companies, even their products that they're selling overseas, were getting slammed, right? You would hear that they had a big exchange, currency issue with the products, right? Because of the whole tariff and the trade war. And so they were taking a hit, in Europe and Asia and Africa and everywhere else because of the exchange rate, right? So again, all this stuff ties into one big hodgepodge of understanding how the financial markets work, right? And how, we being the kind of people who peruse this every day should know how to work through it, how to, position ourselves in a way where we know how to engage it in the same light and benefit from it the same way, right? And so that's what we come together for every day. That's why we're here. I would like to think that's why we're here. We're here to network. We're here to share. We're here to build. We're here to find opportunity in places where majority of our family and our friends look at us like we some kind of crazy people, right? Like, man, what are you talking about investing, man? Nah, man, I ain't finna do that. I'm finna go to work, right? They have no clue, right? This is where pretty much the world's wealth is being stored. It's stored pretty much in equity-based assets. You want to, again, stocks, prospectus values, or, tangible resource in terms of gold, oil, coffee, hogs, again, cows, y'all know the whole thing, commodities, things of that nature, right? So, outside of that, you have to be able to provide a very awesome service, and so that's how this stuff works, at the end of the day. So either you work for somebody and they're out there doing what you should be doing as an investor, or you just skip all that middleman stuff and become, your own owner operator. And that's what an investor is at the end of the day. You're pretty much running your own business from anywhere around the world, void of a middleman, just besides your broker to execute your trade, and you get a chance to live your best life, if you're being able to find a way to be profitable at this. to me, that's a no-brainer. And I'll say that to say this, because if they really want to harp on the value of building out a better educational system in this country to really compete with the likes of people like Asia or whatever, or China, right? That's so-called the biggest threat. Then they're going to have to up the ante when it comes to education. And that segues me into the conversation I have on the board today. As you guys can see here, that, in my description box, some of the things, the talking points I want to speak on tonight, in essence, to this study session, so to speak, are somewhat in tandem to some of the stuff we've been speaking about here. Again, you triggered a good conversation point, Chaos, by premising some of what you were saying earlier, to get to get me to thinking a little bit here about why we take this stuff serious, why we're constantly looking for opportunity as traders or investors. And so you think about, right, let's say we start with the first one, right, the vote to federally legalize marijuana. They have a plan to have a vote pretty much this week coming up to obviously take marijuana from a Schedule I drug, right, and make it, pretty much decriminalize it at the end of the day. Let's call it what it is. They're trying to finally get to a point where they're going to decriminalize it after they've made billions upon billions of dollars off criminalizing people, making it hard for, again, y'all know the whole history. I don't have to sit here and give y'all history lessons on what marijuana, for what we know it really has done in terms of crippling, communities, regular people. I mean, it's just staggering, right? Again, this whole prohibition reality, right? Same how it was back during the alcohol days, right? When the mob was running alcohol and bootleg liquor, all this kind of stuff, and then they turned around and legalized it. And guess what? Now the guy that's making the moonshine, they kind of put him out of business, right? He was making a killing during prohibition, but he had to watch his back every day, right? And again, we just talking about alcohol, right? Again, I know it's debatable whether you drink or you don't, and the different kickbacks from it, this, that, and the third, like the cigarette industry, and whatever. But we're talking about marijuana, right? And we look at the studies again in terms of the kind of so-called quote unquote drugs that they deem to be drugs, which one has caused more fatalities and more injuries to people than others. Their marijuana score is very low on that scale of what they consider to be Schedule I drugs, right? I don't know people who use marijuana who have turned around and got high one night and then went and shut up an entire mall or whatever. I mean, y'all know the statistics more than I do as well. But long story short, the vote to federally legalize marijuana is back on the docket again for them to put it forth for a vote. And we all know who's been investing in some of these marijuana stocks, right? Because that's the first thing that most people who've been criminalized by marijuana now have an opportunity to kind of get in the game now. Well, the first thing they run to is marijuana stocks, right? Because they're like, well, man, at some point this got to take off because everybody uses it. I mean, it's a kind of a natural observation to know that here's a product that if they ever legalize it truly, it could really even help a lot of the tax burden in this country, right? But because they could tax it and make a lot of money from these individual states, and then turn around and better their communities or their society with it, right? Even on the state level, right? So here we are today, looking at this as a benchmark opportunity where this could really kickstart some of these investment vehicles like these pot stocks and turn some of them possibly around. Possibly, again, that's the key word, possibly, and these could be some great investments. So if you look at the marijuana sector overall over the past, let's say 3 months, over the last quarter, I don't know if you guys been watching them, but they're down in the dumps, right?
Yeah.
They're down in the dumps, right? And
I invested in one, and it didn't work out well. I remember.
Say again.
Remember, I told you the conversation I had with my experience when I invest in certain stocks, especially one that was dealing with marijuana. Certain time and season.
Right. Right. And this is the reality where now that this vote is going to go forward, so to speak, here before Congress, and you look at the marijuana sector as a whole, this could be a sleeping giant in terms of a catalyst, right? Because we all know at the end of the day, when it actually does get legalized throughout the entire country, it's going to be lights out, right? Marijuana stocks, again, the market, they can say right now the market is saturated and this, that, and the third. I get it, right? You got Canadian stocks, you got Israel-based marijuana stocks. You got all these different companies who want to get in the space, right? But ultimately, the road leads through Pennsylvania Avenue or down, at least down there anyway, through Washington, far as being able to really put it into practice, right? In terms of legalization and what that would do to the economy literally overnight from the taxation of it alone, which will kind of really bring us back in a lot of ways where all this kind of debt that we're accruing through government, big government spending, constant borrowing more money from the American taxpayer to fund their, so-called, their so-called in-crowd group, and the main, people who really should benefit from this is Main Street, right, which is the average American. But that's not the case. The only people who's been benefiting basically off the last couple of years of this latest presidency value is either Wall Street kind of based people, right, or some of these private companies who are kind of really have a unique product or service that could really benefit. Main Street really haven't got a real big benefit, and I'm just going based off the data. I'm not this is not hearsay, right? So I say, okay, this is why you need to have different forms of opportunity laid before you every single day. That doesn't require you have to go into so much debt to find a way to live a comfortable life, right? And they can argue about minimum wage all they want. I get it, right? We know that this country is very big need of a minimum wage hike, right? You're trying to pay people peanuts on dollars to live in a very inflation value based, society where cost of living goes up almost every year. Rarely do you see them do a major deduction. So again, if you making the same amount of money you made the year before and you don't get a raise, you down, right? Because the inflation goes up, cost of living going up. We talking about 20, 30 cents on a gallon of milk. That's a big difference on an annual basis when you add it up on a fiscal basis. And see, sometimes we don't think that way because we nickel and dime, but sometimes there are some people out there that live like that, and it matters. And so if they don't have any investment knowledge or other ways to kind of procure income, having multiple streams of income, then again they're gonna be stuck to deal with whatever the government is positioning for them to do, and they're trying to move away from some of these little government subsidy products, opportunities that help people, like I guess welfare and all this stuff. They're trying to do away with that stuff a little bit because we know typically Republicans, they run against that kind of stuff, right? Whereas Democrats, they always they kind of for those programs, social programs, so to speak. That's their whole mantra. But it's funny when you look at it from an unbiased perspective. You just say, well, hi, I'm an investor. Where can I find opportunity in any of those things? And that's what we look at, right? That's what we look for. So real quick, I'm just going to share this little article real quick, and we'll get to the bill here, right? I don't want to keep you guys long, but definitely, let's try to see if we can strategize and find, some great opportunity out there where it can benefit us, at some point, and that's what we do as an investor, right? And so let's see here. Let me pull up this article here. Let me make sure I have the full screen up so you guys can see it. Can you guys see my screen there? Is it blowing up pretty solid where you guys can see it? All right. Let me know if I need to maximize it, make it bigger or smaller. All right. But yeah, so real quick. So let's get through this quick little article here. So now, interesting enough, so some of you guys who have been following marijuana stocks, right? You guys know that some of these stocks are down 30 to 40, some of them near 50% off their all-time highs. And it's a reason why they've taken a major haircut, right, over the past, let's say 5-6 months, something maybe a little longer in that time span, right, over the last couple of quarters, basically, where marijuana stocks have just been plummeting, right? And it's because of the fact that, again, you have a value now where it's become a saturated market. But it's kind of like, everybody get rid of the race, right? You have those moments when you was kids and everybody lined up to get rid of the race, right? Y'all know what I'm talking about. But the path that you're looking to race on is maybe like one skinny little dirt road, a little pavement road. But you got all these people lined up the race, right? And so you got this bottleneck, so to speak, where everybody's want to be a part of it, but there's a tight lane in terms of being able to kind of run down that path to get to the victory lap, right? Get to the victory, at the end of the race, so to speak. And that's what you got in the marijuana sector. It's oversaturated, but there's not a lot of opportunities out there based upon what we deem to be something that's going to be futuristic in a lot of ways because of what? Federal regulation. And so pretty much that's their stop loss. The stop loss on the marijuana sector right now is the value that it's still a lot of federal regulation that's dampening them from taking it to the next level. And so because of that whole buy the rumor, sell the news reality, well, guess what? We bought the rumor all the way up until the Canada legalization, all the way up to some of these states getting, mandated to have some of them even medically approved, so they can, sell the medical hemp, this, that, and the third. And then you got a few recreational states in between there, but it's still a far and few between value in terms of what you really need to happen to really unleash the beast, so to speak, through removing it from a Schedule I drug altogether. And now that just, it pretty much drops the chains, and that now it's all out, free fall at that point. And this is how important it will be for some of these stocks who are beat now, again, 34 to 50% now, some on 60%. And this is, again, a true cast to turn around overnight. Because, again, what I've witnessed over the last few earnings report, like basically we know CGC just had earnings, this past week. Tilray had earnings this past week, right? OGI, Organigram, right? Hexo. Y'all know the companies out there. ACB, we know all the little marijuana companies out there. Well, some of the so-called, quote-unquote, best in breed type, right? We're not talking about the little ones on the OTC market, whatever. But we're talking about the ones who getting exposure through, merging, who've been getting some little, acquisition values that's been happening with bigger companies like tobacco industry, like Mo, which is Altria, the companies that make cigarettes. They made a big investment in the Kronos, right? Y'all know CRONs, Kronos. All right. We know that Constellation Brands, the company that makes Modelo, Corona beers, this, that, and the third, they invested in what? CGC at the tune of like $4 billion, right? And the previous CEO of CGC, he was doing what he could under the limitations of, the law, so to speak, to try to ramp the business up. But in terms of, STZ, to making that kind of investment in them, they didn't see that things would happen fast enough. So guess what they do? They fired him, right? And this when the stock was trading up near $40-something a share. And, ever since then, the stock has plummeted. It's plummeted pretty much at this point. And now the stock is trading at literally $15.33, right? Imagine that, right? Right? From all the way, from grace to pretty much to face. That's why I use the grace to face reality. You fall from grace and fall directly on your face. And that's because, again, things are not happening fast enough down in Washington to really open that floodgate. And so you had to kind of been in early on the marijuana pump, so to speak, riding the wave. All right. And now it's at a kind of a standstill, so to speak, until that regulation happens. And so, again, what more better reality or more better kind of talking point to kind of drum up some of that energy, so to speak, with stocks being so oversold, than the idea that they may vote, right, to legally, remove this from a Schedule I drug, and what that would do to the entire sector. Imagine the state of Georgia, right? The state of Alabama, Mississippi, right? These, y'all know some of the off the beaten path kind of states who really have a lot of those old, antiquated Bible Belt, viewpoints of how they view things, right? Drugs, and y'all know the whole issues out there, abortion, and it's wild down there, right? And so imagine if those states became 100% legalized, because that's who's making a killing off their what? Their citizens, right? They locking up people left and right for petty charges of marijuana. We talking about, a fingernail size, marijuana joint. They're giving jokers, 6 months to a year for that. And we know that a lot of it is spun behind a lot of, inequality things as well. They targeted certain people. We know that the study's already out. We already know. We ain't got to see them play that game, right? The FBI been put out studies saying they overly criminalizing people of color, this, that, and the third. So we don't have to play that game. But ultimately, what that does, if they end up, passing this bill, not necessarily a bill, but voting to legalize it, that's going to come with a heavy, heavy burden on the states and the federal government to now repair a lot of that damage, right? And when I say damage, we're talking about all the people that's been locked up from it, what it has done to their employment career, opportunities, and stifling them from being able to get employment. Y'all name it. Y'all know as well as I know that. I mean, it's like, come on. There's a lot of people who not being able to work down in those, smaller states like that, who have a slow economy like Alabama, Mississippi or Georgia, because of these stupid behind marijuana charges that are petty, and they turn around and have to give that job to what? An illegal immigrant. Let's just keep it 100, right? They did a study showing that all the ICE raids late that's been happening, or whatever they are that's been happening under Trump, they've been finding pools and pools of illegal immigrants who are filling the jobs that some of the main citizens who are citizens should have the opportunity to bid for, but they can't, because a lot of these companies are giving those jobs to what? Immigrants. And a majority of them are illegal. It's crazy, right? So again, no matter what side you fall on, even on that argument, but I'm just looking at it from an investor, right? From the aspect of how that all ties back to what I'm saying in terms of how that has criminalized people unfairly. And because of that, you have a deficit in the economy because of, you have all these people who, could be gainfully employed, making a way of living for themselves and their families, but they can't because, they have made it in a way where they can't even get employment behind these old silly, behind petty laws, right? So one of the main things about this article, I don't know if you guys seen this article. Let me post a link because y'all know I like to post the links for everybody. Let me post this link in the chat so you guys can read this thing yourself. If you haven't already seen this, you might want to read it, right? Because it's a very extensive, it's shallow, but it's very extensive in terms of what it could do legally, right? If they go ahead and pass it. And the interesting thing about it, well, you would think it might be getting a lot of kickback even from a lot of Republicans, because a lot of Republicans still stand on that Christian, stance that they, that do things kind of straight and narrow with the conservative way. A lot of the Republicans actually are for it, meaning legalizing it, because at the end of the day, they still are capitalistic minded too. They understand the implications of the amount of money that could be made from it. I mean, we all know that. We've always had that conversation at some point, right? What if they ever legalize marijuana like they do cigarettes or alcohol? Man, just imagine that. We've always had that conversation. I remember sitting in college down at Georgia Southern, and my roommates, man, we was in college. Y'all know how I go, right? We do our little sparky too, right? And so we're like, man, if they ever legalize this stuff, man, it's gonna be crazy, right? It'll be crazy. And here we are today, in essence, somewhat in a way where they kind of force the issue. A lot of people who's been lobbying to make this, to remove it basically from a Schedule I drug. A lot of energy in that effort has been coming to fruition, and we are on the cusp of potentially here before we get out of into the 2020 session. Well, I would say that we've hit 2020, but really get to that next stage, the next 10-year value, where we may end up, seeing this thing come to fruition. And so, real quick here, let me just go through a couple of points here. What I found to be very interesting about this article is the value, what this does for those who've been, again, disproportionately decriminalized from it. But what that also does going forward in terms of how they're going to do reparative justice to those people and what that could do to the overall economy, right? And as an investor, or as investors, how we can benefit from it, right? Because we know that this is pretty much the only catalyst that we need to take these marijuana stocks to the next level, right? Where they'll turn around, rebound, and they just go to root, right? Because now everybody can have the opportunity to invest in these companies, who are obviously now be given the opportunity to open up dispensaries and have tier 1 license, tier 2 license, and different licenses where they could be a part of the industry at some value, right? As a transporter, as a grower, right? As a distributor, right? All the different pipelines that are offered. Well, that opens up that window where they was only giving it to a select few. And so a brother who was sitting in prison just literally months ago can now be an entrepreneur and capitalize on that industry that he has a lot of knowledge in, or she has a lot of knowledge in. Imagine that. So I want y'all to ponder that. But again, that's why this is important, right? And I found this article to be very interesting. And again, it's well vetted because, again, it's Forbes magazine, so they did a little vet work. You can do your own work. I always say always double check, but still, it's a very well organized article, right? So it said pretty much, I'm going to read a little part of it. So the legislation sponsored by the House Judiciary Committee Chairman Gerard Nadler, right, would remove cannabis from a controlled substance. Y'all know what it is, the whole Schedule I thing, right? I'm going to paraphrase some of this stuff because I don't want to sit here and bore y'all through reading when y'all can read it yourself, right? And set aside funding to begin repairing the damage of the war on drugs, right? We all know about the war on drugs, or who started it, how it became to be what it is, and how they were locking people up with 3 strikes for marijuana charges, giving people 25 to life for marijuana. And jokers out there murdering people, raping people, getting 2 or 3 years, some of them getting probation and sent home. Crazy, right? But y'all know the deal, right? Which has been disproportionately waged against communities of color. Right, those programs such as job training, legal aid for people impacted by prohibition enforcement, loans for small cannabis businesses owned and controlled by socially and economically disadvantaged individuals, efforts to minimize barriers to licensing employment in the legal industry would be paid for with a new federal 5% tax. Right, we're talking about a mere 5% tax on marijuana sales. What that would do to the economy overnight, the amount of money that will be generated just off of 5% sales tax on legal marijuana, right? It's crazy because I've crunched some numbers, right? So again, moving on. marijuana sales instituted under the bill, right? And some of them would be administered by a new cannabis justice office in the Department of Justice. So they even think about formulate an entire new wing of the Justice Department to deal strictly with marijuana if they legalize it. Again, so y'all know what's happening there, right? It's got that kind of a double message there, right? They're gonna decriminalize it after they made a ton of money off the people criminalizing them, and then turn around and also make a ton of money off reparative justice and kickbacks and grants that they can also now use to kind of fund these programs and these people to kind of get back into society, rightfully so, as they should have been. So they finna make it. So again, y'all know how this stuff goes. I ain't just making this stuff up. It's crazy. Go ahead.
It's a constant revolving door. How they
exactly.
See how people don't understand how this game works, especially in this Western capitalist world. Either you're going to be the ones engaged in the F, or you're going to get fucked. It's one way. You can't escape it. Right.
And again, it goes back to the idea why, again, under the a capitalist society, we realize how the game is played. Love the power or the value of an investor, because again, we get a chance to see it from all angles, right? We're not sitting there, having delusion of grandeur. We're not jaded by, being kind of, ignorant to what's happening. So when I think about the power, or the power of the investor, the due diligence that has to be performed day to day, well, all these things tie into our industry, political science, social sciences, consumer sciences. We have to study these things, right? International and global, global sciences. We have to study this reality, right? In terms of how this stuff ties into our industry, because again, it's like the domino effect, right? One affects the other in a lot of ways. So again, as countries evolve, as history evolves, as technological advances evolve, whatever, these are some of the things that we're going to have to deal with. And for some of you guys who are pretty much in your 20s still, or maybe teenagers, whatever, this is the evolution of a system that you're going to inherit. Right, and some of the older heads are kind of falling back or falling off or dying off, whatever. You guys are going to be the new policy writers and shaping the economy in a way where you want it to, to benefit you. Now, it's going to come with a lot of problems too, because again, you think about the people who've gotten rich over the past, let's say since the Great Depression, right? All the people who made billions and billions of dollars off that, that kind of it was our turn, and they messed up a lot of it for us because we still having to deal with their debt, right? They constantly borrowing money. It's the reason why national debt is at at crazy nosebleed levels, and people still not paying down this debt. It's the same reason why the feds are printing more money, diluting the USD dollar, even though it's still higher than everybody else under the trade war. But these are debts that's going to accrue that we still have to pay back at some point. And I say we, meaning the overall taxpayer, at some point. So I say, well, again, if you're going to play it from that perspective, that the whole go to school, get a job, so you can get, work for somebody else and, barely get by, whatever, even if you're making six figures, I mean, you still under somebody else's roof. They can turn around, go under them tomorrow or fire you, whatever. I don't want to live under that kind of mentality, right? And so, again, this is why investors are, again, it's like, when people used to look at that kind of stuff, like, man, I don't know about that. I mean, I have no clue, what this entails, but if you really understand what this is about, this is your ticket where they can't discriminate against you. They can't discriminate against you, against your color, your sex, your gender, age, whatever. That stuff doesn't matter here. How many felons you got, what your credit like, none of that stuff matters when it comes to investing. None of it. And so you have an equal opportunity, just like a Warren Buffett, a Paul Tudor Jones, a Ray Dalio, or Bill Cooperman, all the people that's complaining now, Bill Ackman, excuse me, and Leon Cooperman, all these guys who making billions of dollars, average people who came from nothing, right? And so, again, we talking about lessening, the blockage and giving us opportunity. Where here we go. So again, this bill is very universal to a lot of people of color, only for the fact that we know it has disproportionately discriminated against a lot of us, so to speak, right? And so again, it goes on to say the proposal, the Marijuana Opportunity Reinvestment and Expungement Act. This is the act that they're putting forth. Let me highlight that there, right? I want y'all to ponder that. The proposal is going to be called the Marijuana Opportunity Reinvestment and Expungement More Act. Now, who stand more to gain from this right here than anybody on this planet? I'm just going to leave it at that. Who stand to gain more from this? Right? And so this is why this is important too. Not only for the value that it can help a lot of people who's been disenfranchised from opportunity and growth and leisure in life, but also what that does for the investors like us, right? Who's constantly looking for opportunity, right? So basically, it will also provide resentencing. So a lot of these people have to go back before these court systems to get their records pretty much expunged, right? Resentencing and expungement of records for people previously convicted of cannabis offenses and would shield immigrants from being denied citizenship status over marijuana. That one little paragraph right there is the business. Again, that's what we look for as an investor. We learn how to weed through all the fluff, get down to the nitty-gritty. What's the meat of the matter, right? What's the real true catalyst here, right? Because that in itself right there is going to take a lot of money to make that come to fruition. Bringing people back before court system, going through all that. So again, it's a quid pro quo reality. We understand what's happening here, right? They're going to get some out of the deal too, right? Even though they put a lot of people in very messed up situations, but that's how the game is played sometimes. You got to understand, if you can't kick down the door, sometimes you got to go around the back door and come in the other way maybe. And so either way, if it's going to make people's lives better by, taking them off, these harsh sentences and get a chance to expunge their records and things of that nature to give them a fair share, their fair shot at opportunity here, then I'm all for it. 100%. 100%. Right? So if you ever, if you guys out there voting and this comes before your little districts, whatever, as a vote, then you know exactly what to look for. You see that More Act, you already know what to think about. Yep, I'm voting for that hands down. Right? So again, it's very important, right? So right now, it's constantly co-sponsored by 55 people, all but one of whom are Democrats, right? Of course, it's a big Democrat bill, right? It's a big Democrat bill, but there are also some Republicans who stand by it too, right? And so the whole Senate companion is being led by Senator Kamala Harris, who's also running for president. Right, at 2020, the presidential candidate, blah, blah, blah. Y'all know the rest about that. Scheduled for action in the GOP-controlled chamber. Now, Wednesday's planned Judiciary Committee, right there. What date, guys? Wednesday. This Wednesday. So for my investors out there, so what will be Wednesday in essence for us, right? This could possibly, again, it's all speculative. But it could be a what? Buy the rumors, sell the news. But looking at some of these marijuana stocks, you're like, man, there's still more downside on the way, right? I don't know if I want to test some of these stocks right now. Or how would I even go about investing in some of these stocks right now, right? Case in point, let me show you this CGC chart real quick, and we'll get back to the article, and we'll move forward with our little presentation for this evening, right? Let's look at CGC real quick here. Man, when I just think about CGC, I'm like, man, look at here. Y'all see this CDC chart, right? Just look at it. Let me do a weekly. Let me do a weekly chart. All right. You guys can see this here, right? Just look at this thing from a weekly chart perspective, right? And we're talking about, let's say coming off, the sell-off we had early in the year a little bit. It pivoted, and bounced a little bit around, around April time frame. Had a nice little, little pickup from that. You know what I'm saying? And again, we talk about CGC here though. And ever since then, it's just been it's been selling off over the past year, right? Because we know 2018 was a good year for marijuana stocks, right? They were going through the roof, right? They were just taking off left and right, right? Everybody was getting in on the action. We're talking about, 700% gains, 1,000% gains, 2,000% gains. So, and we talking about people using margin and leverage. So some of these people are making, tons of money. I got in on a couple of nice little plays. And now, if you're looking at it from this perspective in terms of where we are today, it's like, man, this whole entire sector is just highly, highly oversold. And so basically what you have here is pretty much like you got like a double top here in 2019, coming out of 2018 here around August when it was hitting some levels where it couldn't break through, so to speak, right around here, whatever. And, ever since then, let me see if I put my little bar right there. Ever since then, it's been trying to, again, get some kind of form of a catalyst to kind of bring it back to it's to its glory days back in 2018 when it's hitting these all-time highs, especially in CGC, around $48 a share. You had a somewhat of a test of it a couple times again, early part of this year, early part of the fiscal, but everything, ever since then, it's just been lights out, right? Because a lot of these laws have been moving at snail's pace. The legalization, you got some states that picked it up, through mandates and different values of, voting blocks here and there, but it's been at a snail's pace at the rate where everybody's just kind of ready to rock and roll, right? And again, going back to even October of last year, when Canada got that legalization, around that, I think it was like September, October, somewhere around that time frame, when they had another big major catalyst and they rocketed higher, right? Now it's like, well, we don't have anything else out there to kind of move the marijuana sector, right? Because everybody's still waiting on the biggest, catalyst of all time in terms of legalization. And so because of that, guess what the marijuana sector did? Based around April of this year, it's been selling off ever since. A steady sell-off. Look at this major sell-off. Look at this decline here over the past, literally 7 months. And again, this past month was just really just ugly because again, earnings on top of already a deflated sector, on top of already kind of, people are just kind of feeling to the point where they're just, hey man, we're getting frustrated, we're getting restless here. And so a lot of people have been dumping their marijuana stocks. Some of people, a lot of people are underwater because they came in, up here, around the $30 level, around the, above the $25 level, this, that, and the third, and they already underwater on their investment. And some of them held, from 2018, the major seller we had, obviously going into the Christmas session last year, right, when the whole market crashed, got a nice little rebound, added to the position somewhere around here, got a nice little bump up here, back to this level of resistance around there, $48 a share, $49 a share. And ever since then, again, sell off. And then this past month, November has just been real ugly for marijuana stocks, right? And we just look at the month of November alone, it'll make you just, you might want to cry if you're a marijuana investor. All right, we're talking about, from $21 a share all the way down to $15 a share at this point. And earnings report really showed, basically how they're being, pretty much put on ice because of all this this saturated competition out there, but not enough legalization to really open up that floodgate. I mean, it's highly oversold. Y'all see down in this RSI, it's like highly oversold. Right. I mean, again, it gets no better than these opportunities when I'm thinking about in terms of a major pivot. Now, sure, we know easily that this thing can trend down a little bit lower. Right. And we look at the charts because those are predictions or predictors of past performance becomes future observations to kind of look at in terms of, where this thing could possibly go. Right. So we have another major support level down here near 1336, somewhere around there. Right. A smaller one round, maybe let's say, give or take $14.21, right? If it breaks through that and clips this 1341, whatever, it could easily find itself back down there, $11 a share, right? And we talking about way back 2018 round, basically August of 2018, when this stock was trading at that price, right? So, but at some point it has to bounce, right? At some point you have to have a recoil, so to speak, right? It has to bounce back. So, what do you need to kind of make that happen? Either people who are saying, okay, enough is enough, right? And I'm going to buy some of this up, and you start having a new influx of volume coming in through the options market, through regular retail investors coming in, buying the marijuana sector, or also in tandem to some kind of major catalyst. Well, what is that major catalyst? Legalization. So you got a lot to think about here in terms of the marijuana sector. If you're thinking about opening up new positions on this, well, the safest way to trade some of this stuff is, in my opinion, through the options market, right? Because now you have a chance to write some extended, time frame leaps or contracts, and this is where you can give this thing time to turn around based upon the idea that if this vote goes through in a way where, it's a success or it gets to the next level of its journey to push through Congress, then this might just be the turnaround the marijuana sector needs to kind of get back to the its grace levels. This $40 to $50 level in terms of CGC. I mean, all the stocks that are in this sector are looking the same way. Let's look at Cron, right? Cron just had a major acquisition deal. Well, again, by Mo, which is MO is a ticker symbol, Archery, a company called Archery that makes cigarettes, that they're investing money in them because, again, they're looking for these marijuana stocks at some point. If they end up getting legalization the same way cigarettes kind of got their major bid, then what is that going to do to the cannabis sector? It's going to be crazy, right? It's going to be like, again, open up the floodgates and it's, lights out. Look at CGC down to 27 on the RSI. It's under 30 on RSI. It's so oversold that it's ridiculous. I mean, it can easily go lower again. Granted, we still see there's some room down here to this point of support here, or demand zone, so to speak. If you're doing supply and demand zone, around $5.70-something. If it breaks that, then guess what? It could be lights out. We're talking about all the way down to 440, down here to about 367, 370 something. And so some of these stocks are at what they call do or die moments. That's why I want to talk about this tonight, in essence, because they are at these moments where this could be a great opportunity to come in, start small positions. Obviously, give it time to shake out. You got a major catalyst coming up this Wednesday, where if it goes well, from the sound of it, somewhat, again, from the sounds of it, still speculative, that it might be a good opportunity where they may try to push this through, right? Because again, they still think about all the money they can make off this from this side of the coin now, after they criminalize people under it, that it might just be the big pivot that the marijuana sector needs. So MJ, Cron, CDC, AUPH, Hexo, Aurora, y'all know all these comes out there. There's so many of them out there. Organic, these may be good assets to probably put on your radar. And I'm saying that because I always put my money where my mouth at. So Monday, I'm going to be looking to kind of take some small little positions on some of these assets. Even if it's nothing, just a small bounce in the buy the rumor, sell the news, going up into this Wednesday trial, or if you want to call it trial date or Congress date, I want to take advantage of some of that recoil, because these stocks are highly, highly oversold. The RSI don't lie. Look at the RSI, right? They're down in the peanut gallery, right? They're down there with the wild animals, right? They're down, y'all get it. And so again, this is why this stuff is important, because we are forward-thinking people. We think we play chess, not checkers. This is a forward-thinking moment. Not only could it help a lot of people who've been criminalized from it, but we can also turn around and start injecting, some capital into some of these companies who are, quote unquote, some of them being the best of breed, what they are. I mean, we're not just talking about these little penny anyone that's on OTC market, even though some of them might turn around and also be just as powerful, but still, we're talking about stocks who have actually been able to kind of garner some good, good money through people want to merge with them or do co-products with them, this, that, and the third. Anheuser-Busch is doing a co-sponsored product study with Tilray. We know, again, Constellation Brands is hooked up with CGC. We know Mo, which is a company, Altria, that does is in the cigarette industry, tobacco industry. They just partnered with Chronos. So y'all see that they want to get in. They want to invest a lot of money into them, but they can only go as far as what the legalization is. But if they open up this floodgate and legalize it, y'all gonna see the tunes of billions and billions and billions of dollars get flooded to these little penny and little marijuana stocks, because now they can get into the game. Income, the marijuana-based beverages. Income, the marijuana cigarettes, right? Yep, they're already getting having the issue with the Juul, with the vaping stuff. Right, and turned out that the CDC actually just found out what has been causing this abnormality that's causing people to get sick, and also a couple of deaths based upon the vaping. Right, this chemical compound is being made behind these little Juul cigarettes. Well, apparently they narrowed it down and figured out what the culprit was. It's not so much the value of you vaping; it was a chemical, I guess, reaction that was happening from the value of some of the stuff that they was using inside of it. So it wasn't necessarily the product itself. Was just, y'all got to remove this, and then, okay, you can probably get back to doing your business. So again, all those companies like Juul going to benefit from this. Again, InBev, I see some people got in the chat, InBev, 100% right over Gordon. I mean, the list is endless. And some of the ones I like personally, again, y'all know Cron. I'm talking about best in breed organogram. Excuse me, I've been talking about organogram, all last year, or back and forth to some people that know about the sector. and that's a little company down in down in Africa, right? And they got hectare acres, excuse me, of fields of potentiality they can grow marijuana, right? And it's some of the best on the market from what I'm hearing because of the soil content and the quality, right? So again, you talk about, all these things that come into play. These are great opportunities, or what they call investment vehicles that we could probably get latched on to. Whether you do or you don't, I'm just speaking in tandem to do your research, right? This is all about due diligence and discipline. But when there's opportunity, I'm there, right? Y'all know my mentality, right? You've been trading with me long enough to know how I am. If there's opportunity out there and I can substantiate it to a certain degree and done my research, then guess what? I'm there. And so I'm just saying this is a great moment to kind of go back and look at some of these marijuana stocks. You got a great catalyst in this federal, case that's coming up in terms of what, the Congress, I want to call it a case. It's pretty much a mandate for them to kind of legalize it. And if everything goes well, then this could be a big overhaul for the judicial system, the Justice Department, in terms of how they have to go back and retry a lot of these cases, expungement. Some of you guys may have been penalized by this stuff before. Hey, this opportunity to kind of get that stuff cleaned up, right? That's what's great about this. So again, there's a lot of things that can come from this that could be just nothing but a positive, and I'm all for it 100%. I'm all for it 100%. I'm down here in the belly of the beast in terms of the DC area. So if I see any of this stuff in any of my district areas, whatever that could be a part of, I'll 100% vote for it. Right? I vote for stuff like this, right? Because again, it's gonna help a lot of people. If it comes up to that reality, I'm all for it. Right? So again, I put the link in the description box. You guys can go read it in depth. Again, I don't want to spend too much time talking about it. You guys can research it yourself and draw your own conclusions, whatever. But this is very important because some of you guys, again, that may have family members who benefited from this, that can benefit from it, or who've been criminalized by it, that have no clue about this. They feel like it's just, they have no chance. They've been, messed up. If they only knew. But now, guess what? You can go back and share this with them. So now they have something to fight for. Right? And so just put that out there. All right. So we'll move on. You guys got any questions concerning that real quick while we at it?
And go to
no.
Go ahead, Sister Mo, you on? Let me. I'm gonna go back to this. Hold up. That's Sister Mo. Oh, Brother Lodge. Okay, you on? I see you up there. What's going on, Brother Chris?
Yeah, I don't think I have anything.
Peace, power, and profit, Oba.
What's going on, family?
Oh, not much. I just came on maybe about 10 minutes ago. Got here a little late. Facebook done, blocked me for being outspoken.
Hey, welcome to the block crew. You know me. I've been in Facebook prison so much, man. Every time I go there, they got my favorite sale. They got my little favorite little vegan sandwiches. I stay in Facebook, right. I love it too. I feel like it's a badge of honor to get suspended by Facebook because I'm saying something that they can't deal with. And what's great about it as an investor, guess what I also get to do? I get to short their stock when I see it's in the point where it's a supply zone and make money off of it. So I get excited.
Those are facts, Oba. All facts. But I was just telling a friend the other day, we was talking about marijuana stocks, and I had to let her know that Tilray was $300 about a year ago, and now it's only worth about between $15 and $20 right now. So just trying to get her the picture, like, how big this is and how much change can happen in the markets, because she wants to invest. And I just tell her, you gotta look at the data. We do due diligence.
All right, African point. I'm gonna step off. I'll talk to you later. And one other thing, African point. I'm sorry.
Yeah, no problem. Yeah.
I'm sorry, brother. Cut you off. I take notification on my phone, so I'm still subscribed to, so I'm good. Thank you.
Yes. Say it again. Hold up. Say it again, brother.
Yeah, I am still subscribed to your channel. I just noticed my phone. It did give notification, so it's a good sign. Thank you.
Okay, great. Yeah, no worries. You're welcome at any time. You're welcome to the panel. I enjoy having you. You already know Ubuntu, the whole nine. You already know it. You family here, so definitely stick around whenever you can, or you see us on, come by. You're welcome here.
All right, cool.
Yeah, go ahead, over Chris.
Yeah, I was just telling her that, the markets can change so fast, and that, there's a lot of opportunity to, get a bag, like you always say. So, I was just kind of showing her, like, there was a time where, weed stocks were booming, but like you was talking about, looking at the charts, they've been on a decline, in the last six months or so. So, I was just trying to like coach her and, educate her a little bit, that, it's opportunities for this thing. If you really want to invest, you just, you have to be, diligent, and you're studying and analyzing, and paying attention to news and things like that to determine what you need to do. So,
right. And what better segment, an opportunity to actually even have that conversation with her, whether we knew this article was coming out or not. For some of those people who are forward thinking in terms of they promote, and devote a lot of their time in the due diligence of this sector, a lot of these people are already waiting on this. I mean, again, I've done an extensive study ever since, 2017, 2016, again, so, it comes in cycles, right? It's cyclical in that perspective because ultimately, at the end, it's still hinging on the idea that they have to what? Legalize it, right? On the federal level. Yeah, we can get some state victories here and there, but until it becomes a federal mandate, it's still a lot of what? Ambiguity. And it's the reason why a lot of these big, hedge fund investment, forums out there are afraid to really put money into the sector, even though it's still legal from, being able to trade it on our U.S. based markets, is that they don't want their portfolios to be tied with what they consider to be still what? A Schedule I narcotic. Because they're thinking about what it does and how it looks in terms of what, they're investors, right? I heard people like Kevin O'Leary, or y'all know him as Mr. Wonderful on Shark Tank, said the only reason why he want to invest in marijuana stocks and he wants to is because it's still scheduled as a marijuana or a Schedule I drug, and he think about what his investors going to think. Now, no true capitalist really thinks that way. Who's really trying to get out of the bag? But again, they play that mental game with themselves. Because they got those Grey Poupon type clients, right? Who think they, greater than thou and all this stuff. And they turn to know this stuff, but they know at the end of the day, this is a great investment, not only from a medical aspect, but what it does for the overall, economy in terms of the taxation, how that would inject billions of dollars back into the economy that could be used to do good things with in terms of they put that money to work usefully, like, fix these raggedy roads, right? Fix these schools up, the things that they should be spending money on, but they don't, right? And so this is why I like it from that perspective, because on a state level, well, guess what those states are going to do with that money? Supposedly, what they should do with that money is what? Do just that infrastructure building, ramping up their school districts, ramping up, better hospital care, this, that, and the third, making the quality of life better based upon that taxation. Because again, you're going to have a lot of people that's going to be what? Want to partake in it. Number one, because it's not illegal anymore. Number two, it has a lot more health benefits to it than that of the stuff that the hard stuff they're doing to kind of self-medicate with through liquor and cigarettes and all the other drugs that I can't even pronounce today. I have no clue what the people on today. So it's more healthier, right? So that means you're gonna have less people getting y'all jammed up and whatever. The worst thing you're gonna have is a joker sitting at the red light, sleep. You know what I'm saying? That's about the worst you're gonna get, right? At least he ain't gonna be out there driving like Evel Knievel. Rick and Bobby want to go fast and run into somebody. That's what alcohol does. Alcohol gives you this invincible mindset. You want out there and go fast. Marijuana, you're gonna be going slower than a turtle, and you're gonna be very conscious. Your eyes gonna be wide open like an owl. I mean, y'all know what I'm saying. I know we're having fun, but this is that reality, right? We have to deal with it from that perspective. But again, from an economic perspective, this could be very huge. And so all this is, again, this is a whole new cycle of potentiality. We saw how it was skyrocketing. Go ahead, Oba. I'm sorry.
Oh, no, I was listening. Go ahead.
Now I'm saying it was. We saw what happened in 2018 when it was skyrocketing. Mm-hmm. Again, look at Tilray. I have Tilray on the screen right now. I mean, y'all see that, right? Mm-hmm. Again, like you were saying, you was telling your friend how it went basically from $17, $18 when it IPO'd and ran all the way to $300-something. And I took advantage of it. I wrote it up and I showed it down. The power of investing. Get excited, right? You gotta love that.
Right.
You see what I'm saying? So look at the chart right. Let me make it the full screen on the chart so you guys can see exactly what I'm talking about here. I just showed y'all CGC. I just showed y'all Cron. Look where T-Ray is at. It's right back down to its IPO price area. Imagine that. RSI 32.88. At least it's above 30, but it's still raggedy. Actually, think about where it came from. Right when it took off, it went from like $17 all the way up to $300 a share. Right, big nasty blow off top here. Obviously, the month of September, it was September 17th to be exact. It's crazy, nasty blow off top in that week. Stock just went parabolic. Right, we were tearing it up to the upside, and then again we rolled it back down. Big major gap down. Ever since then, tried to jump up, couldn't break that resistance around like 170. It started there for a long time. It stalled out, and guess what? Ever since then, decline. Just a series of lower highs and lower lows to where we are today, which is at a lower low, back down the IPO price. But just like the guy on Coming to America, when he was like in the guy in the barbershop, aha, we may be in a turnaround. Whether you like the sector or not, maybe you like Tira, you don't. There's other stocks you can invest in. It's the idea that if this vote does go through again, that's going to open the floodgates and bring new cash back to this sector. And so, again, I'm not going to harp on, like I said, but I just want to, put that out there because, this is what we do. We forward think, right? We investors. We always looking to, think long term. I'm thinking about what this will be like in a year from now, right? After they get through all the bureaucratic, hoopla and whatever, pontificating and posturing like they doing some work and actually pass something. If they pass this is going to be huge for, millions of Americans, millions of people in this country. And more importantly, people of color who's been disenfranchised by this at staggering rates. Right. And so, again, I'm excited. Yeah, I'm looking for, that's what it should be about. So we could direct people to the opportunity where they can be a part of this MORE Act. They can get some of this money. They're going to start opening up grants. Hello, Sister Monica. Right? Y'all might want to get in contact with Sister Monica because this is going to be an opportunity where it's going to be a lot of grants going to be flooding, right? The government that they're going to pass out now to help these people start small businesses, get licenses, so they can get into this, get into the same sector that ruin their lives in a way where it can help benefit their lives. Right? This is going to be very monumental. And so if you never filled out, or submitted to get a government grant, you might want to go see our Sister Monica, right? So she can walk you through. We got countless hours of grant proposals, how to write a grant, what to look for, the verbiage, how to submit it. We got tons of hours of that information already online under the Brother Garfield Live channel, under the Urban Economic Empowerment Show we do every Wednesdays. That can give you a great pretty much blueprint, template, whatever, to show you how to write for these, submit these grants, because you better believe it's as sure as they open up this, if it goes, full throttle and gets legalized and all this stuff happens, all that money they're going to set aside for grants to help these people get back on their feet. Look at here. They're going to need proper education and tutelage and this, that, and the third. All right. Some of us might even be submitting for some of them grants. So again, that's what makes this stuff exciting. Right. So again, I'm not going to harp on it too long. I know it's one of those topics you just want to kind of delve deep into it, but again, you guys are already awesome. Y'all know how to forward think. Y'all know how to put two and two together to see, to make this thing come alive, this information come alive. So, there we go. We got us a nice little catalyst for this week to play with or put into our playbook. Wednesday is the vote date. Again, however they're going to do it, y'all can go back and read it in its entirety to see exactly the language that they're saying in terms of what it's going to be. But again, just from what I deduce from it is that this can be a very, very swift process and moving through the certain channels of the of Congress if it makes it to President Trump's desk. And he's been on record actually saying that he's open to the idea of passing it or pushing any kind of legislation that has to do with it if they can construct the right bill. Or the right act, or this, that, the third. He's open for it. I mean, if he's willing to do prison reform, right, which is crazy because a lot of the private prison stocks shot up, overnight when he got, when he won the campaign, right? They were voting for him left and right. Right now, he's actually tackling and going against them now a little bit with prison reform. So imagine that, So again, even though I don't know how to call him. y'all make your own little assessment of him, but he still values the ideal of a good deal, right? That's all he cares about. That's that narcissism, man. He wants to always be able to make a good deal. So if you can come to him with the right kind of reality, then he'll strike a deal with you. You don't care because that's another notch on his resume. So again, it took people like, again, Kanye West and his wife, Kim Kardashian, right? Whether you're a Kim Kardashian fan, you're not, but again, y'all know I am. I'm talking a little trash, right? Of all people, she's, helping him, push, again, prison reform. Now, who would have thought? What ties does she have to something like that? Whatever. She lived a good life coming up, family. But either way, it doesn't matter. If it's helping people, get, another fair share at the justice system, which is very unfair, then I'm all for it. Case in point, matter of fact, they just signed a petition to have the guy down in Texas, over Chris, you definitely could probably speak on that. But that guy that they did a stay of execution for the guy, Mr. Reed.
Yeah, Rodney
more
Reed.
News came out saying that he, might not have been the guy that killed and raped that woman down there that, the whole country all riled up about. And, he was actually sitting on death row about to get executed, and he got just a pardon. Well, I don't know if it's a full pardon yet, but he got a stay of execution at this point on the governor down there. You might want to, you know anything about that, over Chris, at this point extensively?
No, I don't have all the details.
Right, but again, I know it's a big case out of Texas, so either way, I'm sure.
Yeah, definitely.
And, they're trying to get some more information on it. But again, a lot of celebrities got behind him. A lot of state senators got behind it. They signed a petition, so it ain't just one of those average scenarios where we know somebody been wrongfully accused, or whatever. But he actually got a lot of people who are higher up to get behind it. Oprah Winfrey, you got Oprah on the case, even though she ratchet and raggedy, whatever. That's my opinion. Y'all leave me alone. Don't fight me. Right, but yeah, it even drew her attention, and she got powerful friends, powerful influence. Right, it helped because guess what? He got a stay of execution. So again, y'all know. Hey, this is why we follow this stuff, because again, if it affects the market in some value or it has some benefit to it, then we're all for. Hey, what's going on over Sunline? I see you now, family. All right, I see my family N1 Gunner that came through too. Good to see you guys, man. Power and profit, man. Happy to be on. Happy to be before the family tonight. Again, doing what we call community work, right? Finding ways to become more profitable and more knowledgeable. So, again, this is really, really good information in terms of just knowing that, again, if this marijuana scenario go through, that could be just the same as prison reform in itself, if you think about it. Because how many people are locked up on the marijuana charges, petty marijuana charges? We can't even count them. But also the amount of money that could be made if you turn around and give those guys the tools, or those women the tools, to now go and run their own dispensaries. Get their tier 1 license, their tier 2 license, and different licenses where they can now also be a part of the game, as opposed to being part of, the prison side of it. That's what I'm excited about. The true so-called war on drugs, right? Which had nothing to do with no marijuana, right? But we know what's up. All right, but anyway, we'll move on from this. So y'all get it. So that the link is in the description box. If you guys want to go read the article yourself. Again, you might want to be, if you might want to start forward thinking in terms of, maybe want to take some positions on some of these marijuana stocks, because they're highly oversold. All of them are oversold. You just pick one, it's oversold. It's been through the ringer lately. So these might be some good buying opportunities to think about going forward. All right, so moving on real quick. All right, so next order of business real quick. And I'm gonna try to move through these, and I want to keep y'all guys late. I know you guys got family, friends, and I don't know. I think I don't know if it's playoff season or not in the NFL now. I don't know. Y'all know I don't watch sports. I used to be the biggest sport head out there, but I since have pulled back from being entertained and got serious about learning how to be use my time wisely. So if there are football games going on, I don't want to keep you from it if you watch it. Again, that's just where I get my hair done at, like Cat Williams say. All right, but real quick, so moving on, Bitcoin. We know Bitcoin is still kind of, in this chop zone, trying to establish a zero secure support. So it can either make a big move to the upside or down. Again, we don't, necessarily know a lot of late to really, say it's kind of, directionally biased either direction. But either way, it's, in my opinion, it's still holding up very well since it had its last blow off top, when it kind of crossed that threshold from 10 grand and ran it like 14 grand, right? And so what we have here is, a lot of volume of late in the crypto space has been kind of very disparately, kind of distributed across different assets, not just, one of them being, everybody being correlated to Bitcoin, meaning all paired up with Bitcoin and moving off its value. Some of these other altcoins have picked up action, and they were doing pretty good, even though Bitcoin itself was failing. So if you go to my chart here, just look at the overall chart of Bitcoin here. Again, ever since it really took off from the bottom, which we call that bottom, I'm always excited about that because we call that bottom. I remember, as a matter of fact, you on the line now over Chris. Remember I was telling you, I told you Bitcoin was the bottom was around 3,200. I remember like yesterday, I said, man, the bottom in around 3,200. And lo and behold, not only did it bounce around that 3,200 level, I mean, it went parabolic. Again, over a series of a few months, I mean, Bitcoin stood up and took off. All the way from 3,200 all the way up to like 14 grand. Again, since then, it's pulled back, which is just healthy. So if you look at the stock overall, or not the stock, excuse me, the asset overall, is actually still in a good position in relation to its past, chart performance history. It's just at a point now where it's establishing a good base of support, right around this, $8,000 level. If you want, again, plus minus ratio of 7,400 sometimes, around 8,200. So it's kind of stuck in that little channel there. If you put some channel blocks on there, you'll see it's in a little channel at this point. I mean, you see that just from the chart alone right now. If you stretch the chart out, you can see it's in the channel. Obviously, it ain't really breaking down a whole lot, but it's still holding its place a little bit here. I obviously got to redo my lines here because I was trading it in real time through a lot of cases, but for the most part, it's holding some major levels of support pretty well. And from what I'm seeing is, if you look at the volume, because the volume is also another good indicator of where the asset's at. The volume has been kind of trailing off a lot lately. I mean, look at this slope to the downside here in terms of volume. But even with declining volume, the asset hasn't truly it just hadn't sold off like everybody thought it was. Like all the Bitcoin bears are like, oh, this thing from the crash back to 6,000, then from there 5,000, from there 3,000. It has not done that though. And in the interim of all those things foreseeable in their mind that they think this should be happening or could be happening, well, guess what? It's still been catching the bids here and there. Bitcoin futures are back on now. So now it has equity money coming into the sector a little bit, right? Again, with equity markets being at all-time highs at the point where people thinking at some point we're going to have a major pullback at some point, especially if Trump don't do a trade deal. Well, the perfect hedge to overbought assets in the equity markets is what? Gold. And so supposing now what? Crypto. So everybody's kind of sitting and simmering for, basically what's going to happen coming out of the White House in terms of the trade deal, which could be a good, it could be a win-win even for Bitcoin, because even if we get a trade deal and they actually get through all the kind of, the nonsense that they're fighting back and forth. Well, one thing for certain is that headwind will be out of the way of all the markets in terms of Forex, crypto, gold, all that, and people can get a more accurate, pretty much viewpoint of where assets should be going forward, and they don't have to worry about that in terms of all the volatility, right? The uncertainty that comes behind this trade deal, and you can start investing properly going forward. And so at that point, that can give people more, opportunity and time to start focusing on more important things, like hey, what's the next catalyst for crypto? Right. Well, most people thinking, okay, if we get a trade deal, crypto is going to sell off and just go to zero. I don't believe that to be true, because if that's the case, you wouldn't have all this money that came in, especially as coming back, around the summertime, around May and June, and that money just going to obviously just turn around and give up the opportunity and just go flood these overbought assets in the equity markets and chase them when they already at nosebleed sections. You see the logic in that? Even with a trade deal, the market's still overbought. When it should be kind of correcting itself, because the Fed is easing and cutting rates. they pretty much it's inflating the bubble, and they rather put it in assets that they can control as opposed to things that they have no clue about in terms of crypto. Again, gold being where it's at, it kind of broke out, then it kind of went dormant a little bit here. But still, at the end of the day, these assets still going to what? Cycle through their cyclical value, and they're going to catch a bid at some point. And even though the volume is getting less and less in the crypto space, if you look at this on this weekly chart, the asset still hasn't sold off. But typically, when a lot of volume start leaving, that's when stocks or basic stocks as a whole start selling off. And necessarily hadn't happened with Bitcoin. It's still sitting at a good level here, around 8,400, 78, 7,400, $100. When everybody thought at this point it'd be down there 6,000, 5,000, this, that, and the third. So again, just looking at the chart, if you really looked at this from an investment perspective, y'all already know, it's starting to what? It's consolidating. It's starting to consolidate, right? It's in that channel. It's starting to consolidate. Y'all know how things get when they get tight, right? When you had that moment of what? Convergence, then divergence, right? The convergence is starting to come to fruition, right? That thing get tight like a Bollinger Band. What's going to happen? It's going to be like a pressure cooker, right? Either upside or downside. And so just looking at where the stock, I keep saying stock, where the assets come from, it's still showing, some value of strength because it hadn't peeled back and produced the kind of value of I should say, the level of skepticism that people thought it would be at this point in terms of how I had a blowout top and went to 14 grand and pulled back and necessarily I just sold off and just dumped. It's still holding its own. So again, and I'm saying that to say because if you even invest in the crypto space through some of the equity stocks like the Riot, Blockchain, XNet, y'all know all the ones out there overstock. Even Square, they deal in the NVIDIA, they make chips for some of the little miners. Y'all know the whole deal. They're waiting to take advantage of some of that money too, right? Because that's that next ramp, even for them in terms of their book value, how they can benefit off some of that that same little byproduct of the crypto space. And so I'm just saying, keep your eye on the space if you already don't or whatever. But it's still another scenario where we look for opportunity because it's still somewhat, if you think about where it came from in terms of the blow top around 14 grand, it's still trending somewhat in oversold levels. In essence, to the amount of time that it takes an asset to kind of break out, the amount of same time it's going to take for it to consolidate for the next breakout. Well, it's actually on the even kill trajectory because look how long it took down here. When it was down here, bottomed out around 3,200, 3,300, after it kept selling off, coming down, breaking down, selling off. And it hit a point of consolidation here. That's when I was drawing all these little things on my little chart here. I mean, who knew? But I was charting it and I was making logical, a logical analysis on what I thought was happening. And it turned out I was right. I said, we at the bottom. I went and looked at the previous chart history. I saw the level of the chop and the consolidation. I saw the thing, building here. I said, we getting ready to break out. And lo and behold, boom, we just got to start step, hit that major point of resistance here. It was lights out, one big green candle. Y'all know what they call them candles, right? All right, it was a dildo and it lights out. Ever since then, just trading to the upside. All right, then you had a blowout top up here, the same way you have in Tier Ray, some of the other companies out there. Beyond Meat had a blowout top. Everybody had a little blowout top moment. All right. Then reality sets in, the stocks comes back down, consolidates, chops out, whatever. And it collects itself and obviously push higher if it's a worthy asset. If not, it's going to dump it so long. We know crypto is here to stay at this point until something really comes out to say definitively that it's not. So I still see this as a great opportunity to start looking at this thing here because, again, as long as it holds this level of 7,800, anywhere around here is 7,400 areas, 7,000 to be at the very bottom, then I think it's still in play. But that's just my opinion. Again, it's all speculative. So again, it's entertainment. I'm not telling you go out and buy it. I'm just saying keep your eye on crypto space. Even with low volume, it ain't just dumping and selling like people thought it was. So it's still holding its own. Bitcoin futures are obviously being more, a catalyst at some point. They're going to start, really getting behind it. If again they can get all the other stuff off their mind, like trade war and all that, then we may see money come into the crypto space and really get it going to the next level. All right. So again, I just want to touch on that. Not gonna spend a lot of time on it. You guys know what's up with that space. If you trade it, invest in it, whatever, it's still a viable entity out there. And so we just want to make sure we discuss that too. We again, all asset classes over here, right? Only thing I haven't spoken on yet is Forex. That's what I got the Forex family in here to speak about it. For those who are trading Forex, definitely come on to the live stream. You can share what you got out, what you see out in the Forex market. Even though I still follow it, I still see some of the pairs. I see what's going on. Again, but you guys are actually trading the asset in real time, so you're welcome to come on and share what you're seeing in the Forex lane. And really get behind it. And weirdly so, I just saw an article today where again another one of JP Morgan's managers over there got hit with charges for what? Forex market manipulation. These same banks, it's always these raggedy banks who are doing all the manipulation in the markets, and they still sit around and say, China manipulating the market, this, that, third. We know American markets are the most ratchet ones. And the banks, of all people, the central bankers, are the worst people on the planet because they're the ones that's calling all this, all this fake volume and fake bot buying and fugazi price action and manipulating currencies to benefit them. They're making billions of dollars, and they're hurting the retail investor. So another one, JP Morgan guys got hit the other day. At some point, they need to shine a light on the real rat over there, Jamie Dimon. Ain't no way in the world all these people keep getting hit with JP Morgan. I think they're about 3 or 4 of them over the past year and a half, and then Jamie Dimon not know about it. Seriously. Again, seriously, whether you're a Jamie Dimon fan or not, again, I just follow the breadcrumbs. The breadcrumbs lead back to Jamie Dimon. Right? People don't want to talk about that, but again, move on. As they say, move on, Emporium. I'll move on then. But again, I just follow the breadcrumbs. Right? So again, let's move on. So outside of that, week ahead, volatility to rise about robust risk rally, but no trade accord. Volatility to rise after robust risk rally, but no trade accord. So basically, that means some of these fund managers or analysts are starting to say that there might be a little bit more risk coming into the market, even though we've been on this melt up of late, and the market just been going up on pretty much as I like to call it, cotton candy and I don't know, ice cream or something like this. In the real world, yeah, we'll just keep going up like that. But yeah, we know this up because of what? The Fed and the White House keep pumping the market. This is not organic growth. This is all, again, orchestrated pumping by those who have a vested interest to keep the bubble inflated, to keep the pressure or keep Wall Street, so-called, quote unquote, happy. And so they don't turn on them at a point where we're going into election cycle to really, determine if we want to go forward with another, 4 years of this kind of market reaction or market action. Now, here's what's interesting. Even though we had a staggering climb in 2017, right, in the S&P 500, let me just go over here real quick and share my screen here. All right, we're moving on here to the next block of information. Y'all guys can see that on my screen here, right? Even though we've had this staggering move, let me move my little, y'all know I got my little script stuff out there. Let me move it off there so you guys can see. Ever since we had that staggering move of 2017, which was the real time to be in the markets, all right, roughly around 2017 when Trump got elected, got in office, the market obviously tore out, went to the upside. Now, obviously, people who, are smart and forward thinking knew that a lot of that was, based upon, the continuation coming out of what Obama presidency, whatever, whether you for him or against him. I don't like him personally, but whatever. I'm just looking at it from an economic perspective or economist perspective. The market was still in the natural trajectory to keep going higher. Obviously, he could say that he did certain things to kind of get people excited and got Wall Street behind him because of his policy to shake it up and go higher. But ultimately, since all this stuff with trade war, tariffs, and this, that, and the third, right, it really hadn't done nothing of all 2018. Right? It did really, it got to a point where almost double topped here. 2017 was the year to really be in the market. January 2018, look what the market was. Sitting at 285, right? 2018 hits, trade war issues. He went to war with China based on Cold War. Guess what happened to the market? ratchet, sell-offs, right? Oh, let me move my little bars all around. I'm moving bars all over the place. All right. You see all this sell-off and, all this uncertainty in the market surrounding the trade war, and the market was just selling off all issue with tariffs with that third. Then you had a scenario where people was like, okay, well, we making kind of move, get around that, this, that, the third. And so the market tried to fight back a little bit, got to a point, hit some resistance around that 285, barely got above it, right? Hit 293, and guess what? Doom. Nasty sell-off going into the end of the year, right? Nasty sell-off. We had that big 1,000-point sell-off in December. Y'all remember like yesterday. A lot of money was made on that day. Down and back up, you know what I'm saying? But ultimately, the market did nothing in 2018 but sold off. Literally, off hitting some highs of 2017. And so you had a rebound coming into 2019 with the help of who? The Feds. Feds changed their little tune, right? Now they got into the rate cut camp as opposed to the rate hike, right? The rate hike camp, which they were standing in before because Trump kept pressuring what? Jerome Powell to cut rates. Because everybody else cutting rates and you ain't cutting rates and whatever, and y'all know the whole reality. But either way, I'm making a point here. It's just method of my madness, right? If you look at the S&P 500 since 2019, so we had that, again, that blow off bottom, right? We normally say blow off top and they go up. We had a blow off bottom, right? The market, the bottom fell out of it and shot to the downside, right? And then it pivot off a V-shaped reversal, which is average abnormal, right? We never, take V-shaped reversals as normal behavior because it's not. Right, so of late, you've just been having all these abnormal V-shaped reversals. Even when markets barely sell off, it goes right back up the next day. That shows you that the market is being manipulated. Because in a natural perspective of how market is supposed to move, it'll move more like how we saw back in 2017, even if it was going to the upside. Naturally, with what? The natural wave pattern. Everything in 2019 is not a wave. Do that look like a wave pattern to y'all? That look like a whole lot of what? Diagonals, which is abnormal in a natural market. That shows you market manipulation, clear as day. I don't have to be a rocket scientist or a great chart technician to realize when I see market manipulation based upon how natural ebb and flow of a market should be, based upon natural sine waves of how it's supposed to flow, up, down, like what ocean waves. What you get a little bit of 2017, you get that in 2016. Everything since then looked more natural. But 2019, man, I don't know what this is. Right? I don't know what kind of board game is this, but again, we know it to be what it is. There's a whole lot of market manipulation based upon, again, tariffs, the trade war issue. There's a myriad of things out there that you can probably, bake into the market and say this is why it's acting this way, but ultimately it's hard for people to really make real good money. So I'm saying all that to say all of 2018 investment portfolios for saving plans, TSPs, Roth funds, mutual funds, 401k, they really underperformed. And who all made money then if all those pension funds and that nature was losing money and not making money? Who was making money? Wall Street, not Main Street. Wall Street, because they were playing these V-shaped irregular reversals and sell-offs and being getting there early because they know a tweet was coming. They just buying boatloads of assets into these V-shaped reversals and making a killing. But the overall Main Street American worker got nothing. They got shafted all of 2019. Basically, even 2018 to be exact. They got shafted. On the back end of 2018, that's when the market really went haywire, when the tariff really began to kick in and affect these companies. It hurt a lot of these people, again, pension plans and saving plans. And the only people made money was Wall Street. And so basically, from October 2018 until basically September, October of 2019, entire year, because we know we always look at the 52-week chart for a reason, the market went basically nowhere. Nowhere. And then all of a sudden, this latest rate cut, right? The one that happened, in October, into September, October, really, really ignited the market. Not only that, in come the repo market, right? Where the Fed start loaning money to banks to provide more liquidity to the market. And the reason why they had to provide more liquidity to the market, because guess what? People are moving their money away from equity markets and hedging and putting in a different asset class like gold. Because they didn't see no top, no end in sight coming with this trade war. They got impatient. And so there was a shortage of liquidity even in the stock market. Imagine that. And the market was at a point where it was going to sell off and roll over. Just looking at the chart, everybody like, this thing can get ready to roll over. Look at this ugly, massive double top here. Clear as day. Right here. And it was going to roll over and then come the stimulus again. Another rate cut. A timely rate cut in October. And guess what happened? Look at them green candles back to back to back to back. Not one red candle in sight coming from that perspective right there. From October, basically. Until where we are today. Green candle, green candle, green candle, green candle, green candle. When the last time we seen that kind of pattern in the market? Go back to the major sellout that happened back in December, January, February. January to February, an entire month of just straight pumping the markets to get the market off the lows at that point where it sold off. And it just kept flooding the market with what capital. That's the last time we've seen that many consecutive weeks, so to speak, and this is a weekly chart of just constantly just people just buying up the market. And all that really is not really necessarily retail investors. That's the Feds. It's the Feds buying the market up right now, guys. It's obvious that they're buying the market up. And y'all been seeing it on some of these days when y'all know the market should be rolling over and selling off. And then all of a sudden you see a green, big, ugly green candle just coming out of nowhere. And the market just go skyrocketing up. On no news, on no major catalyst, on nothing. It just turns around and just ramps up and just goes up for no reason. Like, people like, man, where is money coming from? When all the data that's been coming out been saying that a lot of these big hedge funds or whatever has been pulling money away from the market. So somebody lying. But we know that, the Feds is printing more monopoly money and injecting it into the stock market. Stimulating the market, so to speak. Whatever you want to call it, quantitative easing, whatever, they're doing it, but they're telling that they're not doing it. And so you have consecutive weeks, an entire month and a half of nothing but buying up the market, and no major pullbacks. No major pullbacks. Straight market manipulation. Now, it's good if you're making money. Again, I'm not here. We're opportunists, up or down. But I do know at some point, like all this kind of pumping up the market like this, it has to hit a point of what? It has to have its moment of what? Correction. Or it has this moment of what they call, its moment, a moment of truth. Because there are no more catalysts out there to kind of keep pumping the market by. This last week, they came, last week, basically, they waited almost to the end of the week to play their trump card, literally. Their trump card literally was what? Larry Kudlow coming out saying, guess what? We're close to a trade deal. All before that, China was saying no. Trump was saying, I don't think it's going to happen. Now, because we had a new turn of events, all this headline was risk value. Now, all of a sudden, it went away overnight. And one little ratchet tweet by Kudlow saying, we're getting close to a deal. We know algos have no discernment. All they know is here looking for buzzwords, and then they buy the market up based upon the money that's allocated by the Feds to stimulate the market with. And that's basically what you got right now, where you got an all-time high, basically 3 or 4 days out of the week of last week, where you had all-time highs in the stock market based on no news, no real catalyst whatsoever. There's straight market manipulation and pumping by the White House to further the bubble in a way where people are making irrational decisions in a very abnormal market environment and conditions, where the market has gone up basically 6 weeks back to back, no major pullbacks on what? Turned out the phase one deal was a lie. Turned out the whole idea of China buying more hogs and soybeans and Barbie dolls or whatever was a lie. Again, this stuff is just blatantly now. It's like people are just turning a blind eye to reality and saying, man, how do you even invest in this kind of market? Well, that's just it. It's hard to really, you can trade some aspects of it, but long-term investment, again, the market has gone nowhere. Going nowhere. And again, I said all that to say this is why, people who have saving plans ain't really made no money. They're getting little breaks on the back end of the year, but that ain't really, they made no money of all of 2018, really, because the market was just ratchet and selling off because, the trade war issues like that. So on people making money was Wall Street. Wall Street and Main Street are definitely at odds with each other. No matter how they try to tie it in, saying that they kind of work in town, that's a lie. because y'all see it now as investors. Y'all see exactly what all the lying and the pontificating and filibustering is all about now. As an investor, you obviously know that they're lying. I'm not making this a political perspective. I'm just saying it all ties into what we see as investors, how we need to even understand the value of risk, right? When we're investing or trading, we need to understand all the variables of risk, so we don't get ahead of our skis and start making delusions of grandeur type decisions based upon we think just because Trump thought a tweet, we're good to go. A lot of what we've been seeing of late is actually been the market pricing in what he potentially going to say ahead of him, and the market ain't been moving. That's how come I know he cried wolf so much that people don't even believe it anymore. Well, then you say, well, what's been causing the market to go up then? The Feds. Unequivocally, the Feds stimulating the market. Look at the volume here over the past 6 weeks, guys. Look at the volume bar down here. Look at that volume bar there after that blow off bottom that we got back in September when the market was getting ready to dump and really sell off and really do a major correction and come back down. Guess what they did? Look at that volume bar right here. This is all the Feds right here. This is all the Feds right here on that volume bar right there. And then again, look at the volume. Look at the market. Marching up ever since then. No pullback in sight. Really a notable pullback, what I'm saying. And all on what? Fluff. So again, I'm saying all that to say, in that perspective of me putting that in the description box, that, hey, this is why you want to pay attention to where the market is at right now in terms of us understanding, so we don't get ahead of ourselves. We're going to make good decisions. We're not going to be one of the ones out here just, just, y'all know how people are. They just be going, whatever Daddy Trump says, they just eat it up, right? I'm not about to do that. I'm not about to sit here and just say, hey, now y'all go out and, buy the market up and, just keep, buying and don't hedge or don't do none of that. No, I'm not going to do it, right? It ain't going to happen under my watch, right? You could draw your own conclusions, but ultimately in the end, this is why you need to be very cautious going forward. And we getting ready to get into the holiday session value where Thanksgiving and going into Christmas and New Year. So volatility, even though the market's been having very low expected moves over the past literally 2-3 weeks, and that's why they want it that way for a reason, meaning they're killing the VIX right now. They're killing the volatility out of the market, which brings in what? Big expansions when there's volatility in the market, meaning up or down. They're killing the VIX so they can continue to manipulate the market to the upside based on what? You fill in the blank. Right? You fill in the blank. So in totality, what I'm saying in that perspective, be very cautious here, guys, going into this holiday session. We got Thanksgiving coming up. We still got some major news catalysts coming on the pipeline that we need to kind of be very weary of, so we don't kind of get ahead of ourselves too, right? Because ultimately, as an investor, you need volatility. You make money with volatility. That's how we make our money, especially if you day trade. We need volatility, right? We need, buying and selling at expansive levels where the market can move, sometimes even outside of its ATR, average true range, average trading range, and give us some opportunity up and down. Again, bulls make money, bears make money, and pigs get slaughtered. But of late, under the Fed mandate and the Trump pump, that's been very, very obvious, right? The only people making money is really Wall Street. Even some bulls been catching problems because the weekly options have been going nowhere. I'm seeing bullish option traders complaining right now. That's how come I know it's real. They ain't getting no expansion. We seen the market chop sideways the entire day for days on and days in advance. Like, man, the market ain't going nowhere. So you can't make money if you trade option, even in the option market, because you got no true expansion, even on the daily values. And that's it. The market just kind of creeping up, melting up. So your weekly option positions are just basically garbage. Unless you're buying a lot of contracts and you getting these small percentage moves at a point where even selling premium at this point in the market, you ain't really making no money. You got to be buying these options pretty much outright. But again, that's just my assessment. Again, you make your own decision. Again, I'm not here to, beat a horse in a way where y'all just got to take my opinion for it, because again, it's still my opinion. I'm just giving an assessment of what I see. And even some aspects of the Forex market, I'm looking at the USD JPY pair. I'm looking at the USD Aussie and all the different other currency exchanges out there, the pound. It's crazy out there. Because again, everything is still, relegated back to this whole tariff and trade war reality. When we had a lot of volatility back in the market, when we were talking about the VIX was over 15, when the VIX around 15, 17 in that area, which is a really good area, you had a lot of good contracting and expanding in the market where you can make money on both sides. Now they're trying to starve a brother out, bro. Y'all, they trying to starve a brother out. They basically want everybody to loan the market just to sit. Right? They want you to sit. They want you to be invested more or less in being able to trade the market. Because they know ultimately at the end of the day, you can't compete with the algos because they're programmed to buy and sell in sometimes penny increments. Sometimes they may have like a trailing limit value, how your trailing limit is on your money. They trading pennies and 20 cents and 30 cents and dumping. And you just coming in a 20, 30 cent move thinking you got some follow through, and guess what? Algos start dumping on you. Now you back down because you thought you was getting ready to get a fresh break and move up. This is how crazy this market is. So you have to be very careful. Again, that's just my point. Be very cautious because, again, with all this melt up that's been happening in the market, there's melting up in the market. I do believe that we're going to start getting a little bit more volatility because all the major catalysts are out the way. We just got our last rate cut. We know there's not going to be no more rate cuts coming down the pipeline within the last 2 months of the year. They're already pricing at this point in the Treasury Department that they're not going to be any kind of major ranges of major values of rate cuts. So that catalyst off the table. We know that this phase one deal is the only thing Trump got going for himself to close out the year with, because we know that he's going to use that trade one scenario probably all the way to the end of the year to close out with that, to kind of give people new hope going into election year 2020 as the phase two perspective. So he's going to play this like a fiddle if he can. So you don't have any more major catalysts is what I'm saying. And so volatility has to creep back in at some point. And here's why I know. Because if you go look at the VIX, right, the VIX chart, it's pretty much showing you at this point. Let's just go to the TVIX. We'll use the TVIX, right? Look where it's at. The same way we're looking at the crypto stocks, and we're like the crypto stocks are highly oversold. Well, look at the VIX. I mean, look at the VIX, right? I mean, that's a clear indication, not that it can't go lower, but it's telling you in so many ways that at some point we're due for a bounce. We're due for a bounce, right? And you think about, where it came from, because we know, again, 2017 was a great year for the market. We get it, right? And that's when the VIX started really, 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 turning over, right? You had a new president came in, right? You had this little moment of still downtrend, a little bit of 2016, whatever the case like that, because they were constantly kind of getting the market back in flow. All the stuff that was dealing with coming off the war scenarios and all that. Y'all know how politics work. But again, ever since then, it's just been trending down, right? 2018 hits. Again, volatility comes in because of what? Trade war. That's why you had this little spike up here in 2018, right? But again, it was short-lived because, again, they found a way to start stimulating the market a little bit. So it kind of chopped out, went sideways part of 2018. It went basically sideways in 2018, just to be honest. It stayed in the range of 30. I hear somebody on the back. Is that somebody on the line? I can't see. Is it? Oh, but Chris, that's you? I think it might open. It might have been. Okay. Yeah. So it went sideways pretty much of all of 2018, right? And then lights out to the downside, right? Chopped out, came down, started selling off 2019. Again, 2019 hit, VIX just got coming out. So now we're all the way back down to a very, very if you look at my linear regression band, this is blue and this red line here, that's a linear regression band. It shows you the pretty much the trend of where the assets are moving. It's at a key level sitting there riding this trend line here, this sort of so-called demarcation line on the linear regression band, where if it breaks through at this point, it can get real ugly for the VIX in terms of TVIX, right? You can pull up, the VIX if you use that, whatever. It can get real ugly. But look at where it's at on the RSI. Look at the RSI. The RSI is sitting at what? 30.13. Just like the crypto space, it's kind of a little too oversold at this point, based upon equity, assets are being what? Highly, highly overbought. Apple, Lululemon, y'all name them. A lot of them out there just overbought. Applied Material. You can go and look at a lot of stocks that are just overbought, sitting at all-time highs, and it's just crazy. Then you go look at their balance sheet, not their balance sheet, but their earnings report, and see if they, if they having any kind of natural or organic growth, and it's not. It's just been a whole lot of what? They've been catching bids by what? Wall Street hiding out in these assets and these stocks based upon float, based upon values of minimum, catalyst, things of that nature, and they saying, okay, well, I'd rather park my money here because where's it going to put your money at? So it's like a pump and dump, so to speak. So the whole idea of them cutting rates is to what? Deflate the VIX in terms of killing all the volatility so they can control and manipulate the market, because that's how you manipulate markets when you got what? No volatility, where you kind of subdue, all those who are contrarian to the market to the point where they can't really fight against you, and then you just kind of what? Do what you want to do. And that's basically what you got in the market at this point. Hence why the VIX is oversold. Hence why stocks are overbought, sitting at frothy levels, all-time highs, and they necessarily don't warrant it based upon their natural growth. They don't have any organic growth. They just up because what? They're catching bids by Wall Street hiding out in them. Roku, Trade Desk, Chipotle, Shopify, Meli, even Brazilian emerging market stocks like Meli, MELI. Come on, man. These stocks are just, it's crazy out there. I know it sounds like I'm very contrarian, but I'm just saying you got to look at both sides of the coin. And don't get too far caught up in all the hoopla that everything will keep going up. And then you start what? Injecting more capital into some of these markets at the top. And guess what happened? They just open the bottom off underneath your floor, and you fall through the trap door. Right? So all I'm saying is be very cautious, because volatility at some point has to come back into the market. And that's basically what I'm seeing here in terms of the VIX hitting this point here, this demarcation line on my linear regression band, to say that at some point it's got to bounce because it's oversold. It hasn't been this low on the RSI chart since way back in 2018. So, I mean, again, I'm paying attention to that, because nothing just keeps going up and up forever without a major correction at some point. And it's nothing just goes down. That's a major asset that has a lot of weight in terms of the equity market. We know the VIX is a major, component of, the balance in the market without having to catch a bid at some point. And so, again, that's why, I have that in there as volatility to rise after a robust rally, a risk rally. But again, no trade accord, in sight, meaning no trade deal to really kind of bring the market to where it needs to be naturally, because everybody waiting on Trump to kind of get through this trade stuff so they can plan ahead. They can't, because he got everybody on what? On the stop loss right now. Excuse me, a stop growth, so to speak. They just getting asset, a bubble increasing, but they ain't really got no real good tangible growth on their books. Organic growth, as we know it to be. It's a weekly chart, my brother. Money Green, that's a weekly chart. My bad. I just seen your comment, brother. My bad. It's a weekly chart. Yeah, 100% right, brother Zishan. A fan of Zishan. Who wearing Lululemon pants? Them pants cost what? $90 for the workout pants? $90 for a pair of workout pants. Just to get sweat. Come on, man. Insert your own joke right there. I'll just leave it at that. $90. And go look at Lululemon chart right now, or their stock. Let me pull it up real quick while we're on it. Right? I don't want to keep y'all here long. I appreciate you guys stopping by, as it is anyway. I'm humbled and I'm honored. And we just doing a little forward thinking and analyzing and assessing the market. But look at Lululemon, guys. 2018. Basically from 2018 at $77 a share. And now sitting at $215 a share. Yoga pants. Let me repeat that. Yoga pants. They got some other sports apparel, but not a whole lot. But their major staple is yoga pants. Let that marinate for a moment. A yoga pants retail company is better than, some of these biotech stocks that's saving lives. Some of these, real, true discretionary products that we need, consumer staples that we really need to have in our houses. Novelty, niche market, yoga pants for about $90 a pair is worth better than most stocks out there in the entire S&P 500 who actually have a real, true value of what they call a better mousetrap to offer to the consumer. Yoga pants. 2018 to 2019, lights out. 2019 and going into 2020, you see it right here. Stock basically went from 123, to 215 in 1 year. And everybody else getting ramshacked. Netflix ramshacked. Facebook going through it. Some of them start just not coming around. Apple was getting ramshacked before it caught a bid on the back end of the year. Major tech companies, again, major industrials, Caterpillar, Home Depot, all of them are getting ramshacked. John Deere, ramshacked. But Lululemon gets to catch a bid. Yoga pants. Insert your own joke. I heard them all. I heard you putting all kind of jokes out there about them yoga pants. But they deserve this kind of valuation. I'm just saying. Again, you don't hate the player, you hate the game. This ain't none of it. This all I'm saying is at some point, reality has to kick in, and people will realize like there are other products out there that are a lot more useful on a daily basis that's worth investing in. Who are pretty much still at a point where they're kind of, at a natural fair value. Their PE ratio is not sitting at 30, 40, and 50 in an uncertain market. And they're highly, worthy of looking at for an investment. Who's going to buy that? Spend that kind of money on that kind of a niche market at this point in time, when you can be invested in companies like a Caterpillar or a John Deere. If they really get this trade war behind them, these stocks can actually turn around and get back to some natural growth, because again, they actually serve a decent purpose. They produce a lot of commodities that a lot of countries feed on: corn, soybean, hogs, cows, whatever. Industrials, woodworking companies that make the wood, and the manufacture lumber, liquidators, and all this, produce the wood. People build more houses. Again, we talking about y'all get what I'm saying. But a $90 pair of yoga pants from $77 in 2018 to $215 right now. Look at the RSI. Look how the RSI been pinging up near the overbought for an entire, basically 2 years. It's been overbought for 2 years in a row. Look at this. It barely had a small little pullback. December, which all stocks pull back in December off that big flash crash. All right, warranted in some cases. But that's the only time it's been down this low on RSI banner at that point. And ever since then, back to overbought areas. All of 2019 basically has been overbought for the most part. Look at it. I ain't making this stuff up. Y'all got these same indicators and use it for a reason. This thing been overbought since it even began to even be the idea of overbought. But hey, we just look for opportunity out there. So soon as volatility creep back into this market, meaning we get the VIX off 11 and 12 and 10, all that area down where it's at, 10, 11, 12, and sometime and bounce and get back up near 13, 14, 15, guess what the algo is going to turn on? Stocks like this here. These will be the first ones they're going to go after because they overbought. So all I'm saying is keep these stocks like this here on your radar in terms of you contrary into the market in terms of buying puts. If you in the calls right now, keep eating. Keep eating till they prove you wrong. That's what I love about this market. Everybody can make money, but we still look for opportunity, on both sides of the print. And right now, it's just been riding this little regression band, the trend line of the band like a boss. Look at that. Look how I just respecting that trend line. Small little pulls on it, get back above it, bounce off of it again, bounce it off of it again. It's just riding this trend line all the way up. This latest little candle right here, straight manipulation, all the way from 202 up near 215. basically in 1 week. $15 in 1 week. $15, $17 in 1 week. Last time I had a candle like that was way back back here in September. Went from 183, all the way up to 204, which was the earnings, obviously earnings right there. But this making that kind of move, not even the earnings catalyst, not even a real true daily catalyst or something to look forward to for it to be up that high. Go look on it. If you don't believe me, go look up Lululemon News and see why this thing would be up $15 in 1 day. Them pants ain't called killing on cancer sales. Right? But again, I'm just sent out to say this is why volatility at some point going to creep back into the market, and all these overbought frothy assets out there, you go out there you go look at 52-week high charts out there. Just plug that into Google. They're going to show you all the stocks that are sitting at 52-week highs, and you can kind of do your own assessment whether they warranted or not. Those are going to be the ones to get attacked first if volatility come back to the market. So guess what? Lululemon has earnings on December the 9th. Right? So guess what? Let them keep running this thing up in the earnings. If they don't have blowout numbers, meaning they have to blow it out the water with these earning numbers. If they don't, guess what's going to happen? It already looks like a rising wedge pattern. If you look at that, it's going Boof. It could be an ugly ride back down to the downside. We talking about hitting some major levels, possibly back down to 180s. It could go lower. But either way, it's all speculative. It could go higher. Do your homework. That's all I'm saying. We need volatility to correct some of these frothy stocks. That's why I'm making that point. That's all I'm trying to get at. At some point, volatility going to creep back into the market, and then some of these stocks that are overbought are going to be the first ones to get hit. Look at Apple. Literally a few months ago, they were saying iPhone sales in the garbage. They're still in the garbage. No true innovation come out of Apple. Wearables and services carrying the stock right now. Seriously? Seriously. Wearables and Apple TV, all that. Really? Seriously. Are y'all for real? Stop playing. One of them kind of scenario, like you got to be kidding me. This is Wall Street hiding out in one of America's darling stocks because there's no other way they would trust their money in anything else at this point that they can manipulate and know they feel like they can say, well, guess what? It's Apple. Literally, that's what they're saying. They pretty much telling you outright, we don't care. We just in it hiding out in because, hey, it's Apple. I'd rather put it in Apple than anywhere else. They don't deserve it, but guess what? It's Apple. That's why Maxim came out literally last week. A company, Maxim, that hedge fund company, came out and gave Apple a price target of 190 because true value of what is really worth at this point, based upon the level that they need still iPhone sales to kind of help capture their market, is that which is not there anymore, is showing you that's where they at in terms of their true book value. But this thing's sitting way up here, about basically near 270 on straight pumping up. Look, if you don't believe me, this is the weekly chart. Look at the candles. 1 week, 2 weeks, 3 weeks, 4 weeks, number higher highs all the way up. Unbelievable. 7 straight weeks of just straight buying. Apple. Seriously? Seriously. Outside even the linear regression band. It's outside of the channel right now. That means it's highly overbought. Look at the RSI. The RSI on Apple right now is at 82. Seriously? Seriously. I'm just saying. I'm just saying. Now, I had to have a moment of silence there, let y'all ponder that. I just got quiet for a second. Yeah, 100% right, Obergoren. It's worth more than the entire energy sector of America. Apple, wearables, meaning that little Apple Watch, right? And then Apple TV. Seriously? And they want to talk trash about Netflix? And then Apple TV just get started, and the show they got over there still supposed to be, I guess they somewhat still kind of like, people ain't really, really bought into some of the content they got. Seriously. So again, We just look for opportunity. Again, we're not what we consider to be just a staunch bias value of how we go about looking at, our values of fundamentals and technical analysis. I'm just saying that there's opportunity in the market in ways where it's presenting itself to be just a little too obvious. And so these are going to be the first ones to get attacked if the market ever has a major pullback or a major correction, or the point where all the catalysts run out in the market, where there's no one left to kind of pump the market up anymore. The first stuff that's going to get hit are going to be what? The Lululemons, the Apples. I mean, we can keep going. I keep pulling up charts over and over and show you all this stuff that's overbought and frothy and manipulated. Look at the volume. So at some point, if volatility creeps back into this market, meaning the VIX, the VVIX, or the TIVIs ever catch a bid, the first stocks they're going to go after is going to be all these. I'm just saying. So we established a somewhat of a pivot perspective, thinking about the marijuana stocks based upon a real true fundamental catalyst in terms of the federal, legalization. And then we got a froth alert on a lot of these stocks like Lululemon, Apple, and this, that, and the third, who are up on obvious manipulation. No true organic growth. Apple missed a lot of its numbers in its last earnings report, but it still caught a bid. So I'm just saying, guys, hey, draw your own conclusion. I'm just giving my opinion. It's entertainment. Take it for what it's worth. Don't. I'm just assessing some of the stuff I see. But I know one thing. If I learned anything about this market, I learned how to look at some basic indicators, some basic oscillators, some basic channels, and this, that, and the third from a technical aspect, and applying it to the fundamentals. And I see overbought. I see RSI at 82. It's to the point where it can't even go any higher. Last time Apple had an RSI this high, here's where it get interesting. Was way back here in 2017. Apple had an RSI this high. And notably so, look where it came from in 2017. From 105, November 2016, basically January of 2016, came from around about 110 and shot all the way up to 157 by May. Basically, in 5 months, Apple went from 108, 110 to 157 in 5 months. And straight bye. Jim Cramer style. Bye. Yeah, when he be saying hitting that little buy button, they just bought Apple up like crazy. And then they had a moment of so-called take a breath. Small breath, too. It wasn't even much. Came down about 142, pivot, went back up, made a new high. Came back, established another higher low, went back up. Made a new higher high, channeled sideways. Then you had little pullback, a little bit, came back, still presented a higher low, marched and went higher. And now it's sitting way up in the nosebleed section on no real true organic growth. For what we know where it should be at this PE, at this point of the market, with everybody else going through all kind of headwinds and uncertainty because of trade war and tariffs. How would some Apple get to catch a bid? Because it's obvious. The banks are hiding out in it. Whether you're an Apple fan or you're not, but y'all know my mentality. A real, true, unbiased person when I say unequivocally that every stock in the stock market is a pump and dump to me. I own that. That way, I never get emotionally attached to none of these companies. I understand I am here as an opportunist. I'm here to make money off volatility. I'm here to make money on plus and minus moments of these stocks slipping or also gripping and doing good things and rip to the upside. But I'm not emotionally attached to none of them. Basically, I lease stocks. I don't own stocks. I lease. I do not own. Therefore, you would never hear me sitting there just ranting and raving and falling out, frothing at the mouth like a rabid dog about these stocks. I'm just looking for opportunity. And that's it. And so, again, we didn't get this far learning all these different things about technical analysis and fundamental analysis and not still, hold true to these things That way you don't get ahead of yourself. That's why, again, I'm always preaching what? Psychology. Get your psychology together. Get your emotion together. You can learn how to make some money. That's in all walks of life. Get your emotion together. You can find a way to think clear-headed enough to make you some money. You can make some logical decisions. You can move on the idea of things that you can quantify, qualify more than what you can't. That's how you make money. And the market is no different. Even though it's irrational, it's bat crap crazy, it's cotton candy and blue unicorn farts right now. I don't know what's going on, but I do realize one thing. At some point, it has to what? Balance itself out and come back down. And 100% right, Sister Camille. Oh, you begun. Mark Douglas, trading in the zone. Trading in the zone. Right. Hey, good night, Brother Mateo. I don't know if you already left or not, but thank you for stopping by today, family, too. I'm just not seeing the YouTube chat. I'll be grinding my little zone. I get off track a little bit. Now I forget to look at the YouTube chat. But yeah, 100% right, Eva, Camille. That Mark Douglas trading in the zone. That's exactly why I'm always pushing that audible book, because I know how important it is to realize how to keep your emotions in check. There's others out there too, right? But again, it's important to realize that, so you don't get ahead of yourself and start thinking like some of these people out here who are just always, oh no, it gotta go up, right? It gotta go up because somebody told me it's gonna go up. All kind of foolishness like that. Or why wouldn't it go up? Right? There's reasons why it ain't going up. Apparently, outside of your emotional, air you trying to breathe into it, it still has to have a value of what? Natural balance, natural growth. So a lot of these stocks all of 2019 have been what? No organic growth in their earnings. It's all been buybacks and market stimulus based upon the Feds and Trump. That's what the data say. That ain't what my mouth say or what my opinion says. That's what the data says. The data is saying this. 100% right, Brother Money Green. It's algorithms. Since June, and we can look and see the chart that's pretty much telling you that, again, there's nothing in y'all even value of analysis that would say, why is the stock, up like this? When you can really look and see that, again, you can weed through all the pumping that you get from these news analysts and this, that, and the third, because they have a vested interest to pump these stocks, because, again, they need certain things to carry the overall market, like an Apple, like a Boeing, like a CAD, or, Facebook in some cases, the tech and all these different stocks that they can get behind the financial sector. Financial sector pretty much carried the entire market throughout the entire summer. It was all the financial sector. Go look at their chart. Go look at the XLF. Look at the matter of fact, let us all go look at it real quick. I don't want to keep you guys long again. I got to get off here. It's still, I want to keep it. Look at it. I'm going to prove it to you right now. Look at the financial sector. The financial sector been carrying this market of all of 2019. That's in the eyes of potential uncertainty in terms of the global slowdown across the entire planet, tariffs, trade war, even with the Feds cutting rates, because typically when the Fed cut rates, guess what happens to the financial market? It's supposed to sell off. If the Feds cuts rates, that means banks make less money in lending. How is it still the fact that the banks are still going up? That's how it's supposed to play out. Again, I know we're dealing with irrational and abnormalities and whatever. But when the Fed cut rates, the financial sector is supposed to sell up, because, again, that hurts their bottom line. Interest rates are lower. They make money on higher interest rates, higher APRs. This ain't rocket science. You guys have bought houses, bought cars, took out, loans against certain things. Again, the goal is always to get what? A lower interest rate. That's the whole, everybody would love a lower interest rate. But we know that lower interest rate, banks make less money off us. Like the parasites they are. They all parasites. We know the deal. But the banks have fed this market unsubstantially for the whole of 2019. Look at this. Look at this calendar starting out in January. XLF went from 24 all the way up here to 25. That's a 26. That's a big move in the financial sector. In this ETF ticker. If anybody trade these tickets here, these assets, y'all know that's a major move. That's like going parabolic. That's like going parabolic. And it's been going this way based upon the federal agency, the Reserve, cutting rates and doing quantitative easing and doing the repo market that happened over the past few months, them injecting liquidity, injecting money into the banks to give them more ammunition to kind of keep lending, but also to keep, y'all know this, ripping people off, real Americans off, and lending money and this, that, and the third to keep them Keep them solvent. When ordinarily, when you cut rates, the financial sector is supposed to sell off. Because it hurts their bottom line in their fundamental analysis. Look at this mess. And so again, it's outside the channel. It's outside the channel band. And the channel band, trend regression band here, it started to actually turn back down to the downside. So guess what? Keep your eye on the XLF. Keep your eye on the XLF. We might have a turnaround here. All this inside back down to this trend line at some point has to, hey, who knows? I'm just saying. It's sitting way up in there, 30. Way up here. 52-week chart, forget about it. Forget about it. You know what I'm saying? So, hey, I'm just looking for ways to always look at this market, analyze it for where it's at, where all the real money's at, and how it affects everybody, down here from there. As they say, it all rolls down here, right? So some of these so-called best in breed or the archetypes to this market, I go look at them first, right? The best in the energy sector, the best in the industrial sector, the best in staples and the consumer discretionary, the best in finance, the best in tech, the best, y'all get it, the best in transportation. I go look at the best, and then I start doing my deductive reasoning from those, and I start figuring out where we're at in terms of these sectors. Just like we did the marijuana sector. So I'm just saying, all this is opportunity. Again, we here for opportunity and no more, no less. Simple as that, right? Draw your own conclusions from there, but I just look for opportunity, right? So again, keep that in mind, guys. And so real quick, hey, just make sure you take your appropriate, mental notes. So if you're doing it, writing it down on real paper, these might be some assets you might want to keep somewhere close to you just in case we ever have some major cooling down of the froth machine. Right, the foam machine that is like little kids. They have a little birthday party. You rent one of them little foam machine, bubble machines, and all the kids just get lost in the bubbles. There's so much foam. Where my baby at? I can't even find my baby out here. Baby, they got lost in the foam bath or something. They frothed it all outdoors. It's too much bubbles out here. Too much. Right. So that's what we got in the stock market a little bit. It's just too frothy. Just a little too frothy. Right. Again, just not whatever. Draw your own conclusions. Right, draw your own conclusions. All right, so real quick, let's run over to the futures market real quick. Let me see if I make sure I hit all my little talking points. Oh, real quick, Saudi Aramco, right? IPO, right? Y'all know I've been talking about the Saudi Aramco IPO for almost like 2 or 3 years. For some of you guys been knowing me way back with even on Sal channel. Y'all know I was talking about Aramco way back then. So going on there 3 years, I've been talking about Saudi Aramco. About the IPO. They should have went IPO in 2017. They didn't. They didn't go in 2018. They didn't. They kept pushing it back like how sometimes pretty much like how Uber them was doing. Now Uber is garbage now because they put themselves too much more in debt when they should have went to the equity markets earlier and got a chance to really get going. So their fault. But either way, Saudi Aramco, they're getting ready to go IPO, but they're gonna go on their markets first, I believe, before they bring to the American market. But at some point, they're gonna come this way. But that's the major catalyst. So when it actually does hit the American markets, that's when I kept telling y'all, when that stock comes to the American market, definitely you want to pay attention to it. All right, Saudi Aramco, they just put out some dang, I messed up. It's AM. Hold up. Aramco. Let me just pull up the article. I'm sitting there double typing. They just initiated to go forward with their IPO Even back in 2017, they was giving them a valuation roughly about $2 trillion valuation. Today, it stands at around about 1.7 trillion. Again, the largest valuation IPO ever in the U.S. equity markets history. Saudi oil. Saudi Aramco is the major oil player on the entire planet, where all of OPEC and everybody else bow down to. We talking about Saudi oil ministry, all those guys. They control the chessboard when it comes to the oil market. Russia is just playing, basically being a mediator, right? That's their role in all this in terms of OPEC, all this. They're the mediator, right? But again, this company, again, when it ever makes it to American markets, it's going to be a sure buy. We talking about forget Halliburton, forget Schlumberger, forget all these Marathon Petroleum, forget all Exxon. They're going to run circles around them, right? They're going to run circles around these guys, right? So again, you know, hey, it's just something to think about. So we're talking about a $2 trillion valuation. We talk about, you know, again, some of the world's richest oil reserves, obviously, you know, in Saudi Arabia, whatever, they're controlled by these guys. They're the reason why oil prices can go up and go down based upon, you know, political rhetoric, all that stuff too. But again, this is what it's all about. So let me post that link real quick in the back chat for you guys. So if you want to do your own due diligence behind it, you guys can go look it up. But again, I've been talking about this company for years. Some of you guys know exactly what I'm talking about. I didn't preach about it enough to the point where it's like, man, yeah, okay, moving on. But yeah, it's one to keep on your radar. So if they ever go live in the American market, you best believe a lot of Wall Street going to jump all over it. Wall Street been seething. They've been seething to get in on this stock, on this opportunity ever since, again, 2017. Underwriters like J.P. Morgan, Morgan Stanley, Citi, Goldman Sachs, TD, all of them, they've been seething to get in on this because they know that's going to be one hell of an underwritten contract to be the underwriter for them, because that's a $2 trillion valuation. Some of the underwriters get like a 5% or a 10% kickback as the underwriter on those valuations. 3%, 5%. Imagine 5% on $2 trillion. Somebody do the math on that real quick. I'll wait. I mean, you get that bag up front just by being the underwriter to level out the shares, to present it to Wall Street. Man, that's why they was all over Uber like that and Lyft. The hype unicorn valuations beyond me, because they get a nice little check and they get control of a lot of shares by being the underwriter. Again, they don't really care if these companies make it or not. They just here for the bag. They here to feed off the ashes. That's why they all parasites. And they promote, again, that delusion or that irrational exuberance by ramping up these prices ahead of the, you know, everybody else, the retail market, and these silly behind, you know, ramp ups before the IPO, and then this thing goes public, you know, up $20, $30 above its IPO underwritten price, and then everybody up there that bought in up there stuck holding the bag. Look at Uber. Look at Lyft. Those people still bag holding up there above $56 a share, because the banks caused that. So I'm just saying, again, do your own research. But that one there, I can guarantee you 100%, they cannot wait to sink their teeth into that piece of steak right there, Saudi Aramco oil. 100% right, Zishan. About $68 billion for the underwritten contract to be able to take that thing public in the American market. A $68 billion check in dang near one whop. Let that marinate. I'm just saying, we just trying to, you know, turn, you know, make $1 out of 15 cents. Them jokers get a $68 billion check. They ain't got to do no more underwriting for the rest of the year with a check like that. With a bag like that, come on. It's like hitting the lottery. That's why they want it to go public so bad, because they know it's going to do what it's going to do. That RPO going to do what it's going to do, because it's backed by what? A real tangible resource. It's not a WeWork, speculative. It's not an Uber, speculative. It's not a Lyft, speculative. It's not a crowdfunding. It's not a Peloton. This is not speculative. This is a tangible resource in the ground. which can be quantitatively valued by how much oil is still sitting in their reserves underneath the ground in Saudi Arabia. And it's tons of it. So they could back it by something that's tangible and say, okay, even if you keep oil prices down there, $54 a barrel, $50 a barrel, whatever, they still good to go. You raise it up, hey, whatever. We got it. Y'all need 100 barrels, y'all need 50 barrels. What you need? There's a lot of companies that are DBA off that Saudi Aramco or very subsidiaries of them that are very dependent upon Aramco to be in business. So a lot of people make money, on sidebars eating off the value that Saudi Aramco, the juggernaut that they are. So again, I'm just saying that's another one. Forward thinking. Keep that one on your radar. If it ever hits American market, you best believe they're going to be buying a hand over fist. When I thought they were going to go IPO in 2017, I was ready. I was like, I remember telling people on Sarah's show, I was like, man, when that thing go live, bro, look at him. I'm going to be all over it. And all I kept saying 2-3 years after them, I already know that thing will be, look. So again, whatever. Do your own research. But I've been following the stock going on 3 years, same way I was doing with Amarin, AMRN. They just caught their bid recently. Another one, what was my other one that I was telling people to watch? God, it's been several. Some of you guys have, know me for a while. Y'all know how I am. When I get locked into something, I'm deep in the studies and the research. Y'all know me. It turns out I've been right. Beyond Meat was the other one. I told everybody I was telling Beyond Meat 2 years ago. I was telling people about Beyond Meat back in basically end of 2017, beginning of 2018, all 2018 basically, and to this year, I was telling people about Beyond Meat way back then. I got the receipts to prove it. I kept telling people, when Beyond Meat go public, buy it hand over fist. Some people in here probably can remember it. So I was telling you, buy Beyond Meat hand over fist. Was I right or was I right? I'm just saying. It went from what 45 to what? I'm just saying. Because that was the new marijuana industry. That was the new crypto industry. It's the wave of consumers. Actually, if you think about food stocks, that's a lot where people are going. I know the competition is picking up now. So again, it deserves to come back down to earth. Granted. But still, we were all over it before IPO. Forward thinking. Yeah, 100% right, Brother Zishan. It's slated for November the 17th with the final offer price set at that $1.7 trillion valuation. Give or take, they can probably ramp it up or lower it down, but around about $1.7 trillion. And then when it goes, again, it's going to be crazy. Right, we're trying to get it on the American exchanges. Obviously, I think they're gonna go live first. I want to say on the London exchange. I could be wrong. I could be right to go back and look at it again, but it's gonna be one to definitely watch. Now I don't know if it's gonna do like a Beyond Meat, but I do know in terms of a secure investment based upon actual resources or tangibles that's in the ground, it's a sure thing from that perspective. It's not like, Lululemon sweatpants. It's not like, Apple. Again, y'all insert your favorite stock in that slot. And if it's not really necessarily, warranted where it should be. But again, neither here nor there. I'm just here to kind of, make sound decisions based upon what I see. Right? Based upon what I see. And we'll let the chips fall as they may. Right? Yeah, a lot of people trying to buy Money Green. A lot of people want in on it. They've been trying to get on that thing since 2017. So outside of that, again, for unicorns of this year, they're pretty much done for the year. So everybody now waiting on what? Airbnb, right? Airbnb gonna be next year sometime possibly. That's the only real major one people waiting on going into the next year. Outside of Saudi Aramco, there's some others, but again, we're talking about ones that people have just been seething to get in on in terms of business model, whatever. WeWork is out of the works at this point, literally out of the works on WeWork. They really screwed that up major over there at SoftBank. They messed that thing up in more ways you can even imagine. They botched that. That's like a botched plastic surgery where they took too much off your nose and you got, I don't know what's going on up there. That's a major botch surgery on WeWork. From a $40-something billion valuation all the way down to like 17 or 12, somebody's supposed to be fired from that. But again, hey, whatever. My money ain't in it. But it goes to show you the level of the level of how these underwriters and these banks and these VCs mess up a lot of these stocks or these companies pumping their heads up with delusions of grandeur that they're going to be this big hit on the equity market to the public markets, basically steal cash from retail investors. And turns out they don't deserve it. They ain't earned their right to be here. And they just coming in here to steal and siphon money out of retail investors because the banks are sitting there vouching for them, knowing they parasites. And they get here and then they crash. Uber. You know what I'm saying? We can go down the list. They crash horribly. You see what I'm saying? Space, another one. 100% right, family Evolve. Richard Branson company that's going to be taking people up into space, right? This Galactica company that he didn't put forth, DBA office, Virgin Mobile company, Virgin company, right? They want to get people into space now. That's the next so-called, major thing for people who got money, obviously, because ain't nobody going up to space looking like one of us, right? Them seats going to be costing $1 million plus. I think they priced it with about $10 million, $4 million a piece to take that shuttle up into space. So again, that's a small niche market. It's cool from the technological advancement aspect of it, but again, from a retail investor, we don't really see no big gain in that because it's a small niche market. And so as soon as that thing IPO space, it cratered. Smile Direct, another one. Fugazi Dentist company that kind of some of these kiosks you be seeing in the middle of the mall that had to do something with dentistry and all this, or whitening teeth. Then they're trying to make people braces with no true dentist even in the mix. They just send you a mold, you bite down into it, and then you send it back, and they're gonna send you back a corrective, teeth braces, alignment shield, and you're supposed to have straight teeth from that. And people like, whoa, in these states like, whoa, bro, that ain't whoa. You finna get hit with all kind of licensing or problems. In the event, messing up these people's teeth and not necessarily having a true orthodontist look at people's teeth the proper way. So again, there's always somebody trying to invent the better mousetrap. I get it. I get it. It's a goal to try to build a better mousetrap. But as investors, we understand now, again, how to be forward thinking and not how to move by emotion. We learn how to move by what? Sound decision making based upon quantitative and qualitative data that's out there before us to make real good decisions. Cross comparison analysis, this, that, and the third. Who are the best in breed? What do you got that's in comparison to them? Can you compete with them? If you can't, don't try to waste your time because you're going to get ran over. Case in point, TRXC. I was telling people about that company at some point, and then reality sunk in and said, you know what? These people ain't going to do nothing. You know why? Because the management messed that company up. And they were trying to compete against ISRG, Intuitive Surgical Company, to make the Da Vinci robotic surgery machine. TRXC actually had a good product. Management screwed that thing all up. The stock plummeted. It ain't recovered since. Now it's trading at about 20 cents a share. It's finna pull a HMNY all over again. Y'all remember moving past HMNY, moving past? We used to talk about that little stock all the time, like Sister Q Tech. Y'all know about that stock, Money Green. We used to all talk about that. Sister Camille, some of y'all, from the old room. Y'all know about, we used to all be all over HNNY. HNNY went from basically $3, $4 a share up to like $27, $30 a share. And then from there, it's now sitting down in the OTC market. Basically from 2017 to up into 2018, it was up near $20, $30, whatever, in 2017, day, whatever. Now it's sitting in the OTC market. Movie Pass had a great concept. I mean, you buy a monthly subscription and you go see 2 or 3 movies or minimum unlimited movies you want at a movie theater. Not all the blockbusters, but you still can see movies. And then, again, they messed that all up because they didn't know how to really finagle the movie industry or the theaters like AMC, all these different Regal cinemas, how to really, make it where they both can really benefit from it. So again, then these movie theaters caught on and started doing their own thing. And then guess what? Out the back door they went, kicking and screaming and crying, literally. Now down in the OTC market, in the peanut gallery, with a football helmet on, eating glue. And people that was in it up there saying $27, $30, and oh, man, this thing finna go higher. Okay, well, hey, good luck with that. Good luck with that. Yeah, sometimes you gotta know how to cut your losses or whatever, and hey, y'all get it. Again, I know I'm talking to intelligent people, but this is why we're forward thinking for a reason, right? And this is why, again, we take these things serious. And you should. Again, you should not invest with emotions. You should never invest with emotions, right? You should never invest on emotions, right? Because it's just not the sound thing to do when you're thinking about, how the market really works, knowing what we know now. It just whatever. So take the time, do proper due diligence, research, have a great methodology game about your approach to this market. Don't be out there just trying to, gamble in it. Again, I know it has its moments where it gets you drawn in. It's the hardest thing to do. But ultimately, we're here for the long haul, right? The market is not going anywhere no time soon. So we don't have to kind of trade in it or invest in it that makes us feel like we got to try to, beat it at this one home run reality and then just run. No, we're here for the long term, right? And so from that mentality, we'll know how to, again, make good decisions, again, based upon, data, based upon chart values, tie them all together, in tandem, and then, again, go from there, right? Again, that's what we wake up for every day, for that opportunity, right? So, again, I just want to make sure, again, I premise that. Again, I know I'm preaching to the choir with some of you guys. This ain't nothing that y'all already don't know. But it's always good to kind of always, return back to some familiar places in our head when we're dealing with all this, inorganic aspect of the market doing all this craziness. It's good to have different perspectives. Whether you listen to me, somebody else who knows, whatever. Again, I don't claim to be no one special, but I have an intricate way of looking at things and breaking things down and doing my own perspective of deductive reasoning. Again, it's just all about to bring forth a different opinion or a different assessment, so to speak. And then you add yours to it, you take away from it, whatever. But it's a teamwork effort because I'm on everybody's team, right? That's how I look at it. Right? It's a team effort. All right. So again, that's about it. So I make sure I hit all my bullet points for the night. Oh, and then how to invest when you're broke. Again, I was going to speak about that earlier, but I put out an article earlier. A website earlier concerning that. Investopedia.com. Some of you guys are obviously far ahead of above that at this point, and know how to, shake and move. But I find it to be very interesting. Sometimes I always go back to the drawing board and realize that, you're trying to work with, minimum amounts of money to get, bigger gains, and how sometimes, we can get a little too comfortable and we feel like, just because we don't have thousands of dollars to invest or tens of thousands of dollars to invest with that, we can't necessarily still be successful in the market. Well, I find that to be very a fraudulent thought process, because you learn how to invest properly, right? And we see that every day, even with some of these penny stocks, whether you invest in them or you don't. But even if you trade in the options market, you can see how some of these contracts, again, properly positioned, right? Not just put your money into it just because you think it's going to do something and you get burnt on the theta burn and all this stuff, but learning how to even take, small amounts of money and invest them in the market and get big returns off of it. And so I had been on this little quest over the past, 5-6 months. That's why some of you guys haven't been seeing me lately in these Discord rooms. Is that third? I saw that I've been having a lot of new things to do in terms of chores now, because I actually got my little man a bit more now because we got some stuff going on, trying to get him situated since we moved. And so a lot of my time has been taken away from me in a way that I normally had before since we moved. So I don't have that time to really be in Discord rooms. A lot of the stuff is putting me behind until we get that stuff solid. But even within that, I've been trying to find ways where I'm kind of heavily distracted, where I can still kind of, put less risk out there and get some big returns in the market, since I don't have the time to really sit like I was before in some cases. And I've been proving to find ways to do that. A lot of it, obviously, through the options market, finding these kind of assets that have that kind of great volatility value, opportunity, laced based upon their technical and fundamentals, and where the option markets are starting to, build up in their certain perspective and, getting some good moves. So basically $15, $20, $5 type contracts, I've been hitting oil on some of them. Again, we talking about 200-300%. Some of them went up, man, I had some plays, I was up in 1,000% on some of these contracts, and they were, cheap. And so that's why I wanted to kind of, again, bring that into perspective again about, the ideal that, how to invest in the market as we know it to be. Sometime when people say, well, you know, matter of fact, let me see if I can pull the link. It probably ain't gonna be able to fit in this YouTube back chat because it's a long. Y'all know how Investopedia is. They be having them long links. Like, man, they give me the short version. All right. And let me see if I can get the short version. Okay, yep. I think this is it here. Let me see if I can use the Twitter one. It's always a way around this. But again, some of you guys probably already got it anyway. But anyway, I just wanted to post that for you guys too before I get ready to get out of here. That's the link right there to Investopedia, how to invest when you're broke. If you want to use that term, now I know y'all guys ain't broke, but again, how to use a little bit, you know, how to make good money management decision basis what it entails. Again, it's just another way to kind of refine your skills, find other ways around, you know, the system in terms of, you know, using different aspects of different rabbit holes to get to your end goal. Simple as that, right? So you guys can read up on it. Really, I don't have to necessarily go in depth in it because some of you guys are really beyond that at this point. But it's still good to always fall back to some basic fundamentals, mental fundamentals, to be a benchmark, you know, of place to kind of go back and say, okay, this is where I need to start. You know, I don't want to get ahead of myself. Let me go back to some of the basics, right? Let me go back to the basement, you know, to the basement, so to speak, and you know, and think about, you know, again, some things I kind of got to hit, you know, too far ahead of myself with to make sure I stay, you know, on par, you know, purposely where I need to be in terms of my skill set. All right. So again, I just want to put that out there too. So that's about it, guys. So real quick, I'm gonna jump over into the futures market, see what the futures market doing, and I think that'll be it for the evening. Again, I do appreciate you guys stopping by. I'm humbled. I'm honored. I can't begin to tell you how I'm always, you know, thankful, you know, for you guys to share a bit of your time with me, you know, in this moment, in terms of just, again, just think tanking. You know, that's all we do. We come here to think tank, forward think a little bit, look for some opportunities out there, and then, you know, again, hey, you know, see if we can get to the bag. Oh, no, that link right there, Brother Money Greens, to the that's the Investopedia link for the, you know, how to invest when you're broke link on that one. All right, that's basically what that one is there. All right, so real quick here, let me run over here to the futures market. Let's see what the futures market doing, and then we'll close out the evening here. You know, we'll do a little quick Q&A if y'all guys choose to. Again, I'm here on y'all time. I'm here for you guys. You know, I have no problem, you know, either way. All right, so real quick here. All right, there we go. So, you know, as of now, although we know we had a very frothy run up until the close Friday, a pump from, you know, cut low, ran the market up higher. The futures market, basically, of all last week, the future market was red except what, 2 days? I think 1 day. Every night during the future market of last week was red, but the following day the market went higher. How is that? Right? So again, they ain't giving bears no chance to make no money unless they, you know, come in scalping the future market or playing the down, you know, the down pivot in the S&P 500 when the market opens up at a certain point. And then it rebounds from there, just goes up for the rest of the day or it melts up. That's basically what the market did all last week. It pulled back during the morning market. Future market was down red, and then it pivot, bounced, and just went higher. It did that all of last week, literally. And then Friday, they were just like, man, we ain't even gonna fake it today. We just gonna pump the market, and that's basically what they did. I mean, you couldn't make this stuff up, guys. I'm sure y'all see it the same way I see it. You can't make this stuff up. It's obvious we know what they're doing. You just gotta learn how to trade it where you don't, you know, end up trying to fight the market. And I did that last week. I bought spot calls several times last week, on top of some of the puts I bought. I bought the pivots and the reversals based upon the chart, and I did pretty well. Trading, you know, what I saw to be a pattern that I was seeing that was happening in the market. You know, so I don't think this week gonna be any majorly different. I do think we're gonna get a little bit more risk and volatility this week, as opposed to last 2 weeks, definitely. With respect to moves in the market, last 2 weeks were like $28, $29. This week, I think we're gonna get a little bit more. I think the market is gonna be a little bit more volatile this week than it has been, I should say. because we seen again a lot of people just had theta burns on their calls and their puts, where the market just went nowhere, literally sideways for the most part. Until the end of the day, then it turned up and runs like 80-something cents, 90 cents to $1 at the end of the day. I was like, man, look at these people here. Boy, these some ratchet jokers here. But that's how you got to learn how to adjust the market and don't get, again, too ahead of yourself thinking it's going to do what you want it to do. As well to watch, kind of taking a fair assessment, seeing what the market's been, what it's been doing, and then make your decision based on that. Right. So right now we got the S&P 500 down. The futures market I was down 1.63. Nothing major. The Dow down. Nothing major. 4 points. Excuse me. The Nasdaq same way, 3 points. Small cap I was been getting pummeled. Russell 2000. Forget about it. It's the most oversold product in the in those indexes, and they still ain't turned around yet. Everybody's catching bids and going higher. Small cap still sputtering. It still can't get right. Just like the movie Life can't get right. That's what the S&P the small cap 2000, the Russell 2000 is. Can't get right. And everybody like the Nasdaq now they're looking at him like we gonna miss you. Can't get right because you ain't broke out yet. It's still in the slump. After all this pumping that the market been getting, the Russell 2000 still ain't broke out. Out of it's kind of nasty little trend, a downtrend. In a way, it's barely catching up a little, but it ain't really did nothing. Right. So again, there's something to think about. It's something to think about. So as of the night, again, that's what the market's looking like from the futures a little bit. The Nikkei, the topic's down. The Hang Seng is pumping right now. Again, China gonna pump. So something must be up with China, obviously. You go look up the news on China. They might have some important data to come out this week too as well. But right now the Hang Seng is up running right now, up 225 points. And typically when the Hang Seng is up, guess who's also up? The Dow and the SP 500. But guess what? They down and the Hang Seng pumping right now. So something going on with China right now. Look, it's up 300 points. No, not 300. That was a nifty, but 225 points, excuse me. So something happening in China right now, and they're catching a bid, and it's ramping. And the Nikkei, which is the Japan market, Japan central banks, obviously, they're waiting to get right. But the American market's sputtering right now. All that pumping last week, it's tired. It's out of breath, right? It's like a racehorse. It is tired. Right? Joker like, give me a break. All right. So commodities, same way. So oil, crude oil, WTI up 0.3%. Excuse me, 0.3 cents, 0.7%, 0.07%. Excuse me. Brent oil down 3 cents, 0.05%. Natural gas obviously down. Natural gas can't catch a break. All this so-called Arctic winter blast supposed to be coming to the planet, the country, I should say. And natural gas still ain't caught a break. Natural gas been getting pummeled this year. If y'all been following natural gas, some of you got to trade natty gas. Natty gas been getting beat down left and right. Like Mike Tyson with no face guard, no mouthpiece, no nothing. Straight left uppercut. They've been whooping natural gas this year. Go look at the chart. It make you want to throw up. If you bullish on natural gas, you like, no. Yeah, I'm just gonna have to move on, kick rocks, because natural gas been getting beat down, and it's down tonight. It ain't no difference. It can't catch a bid. Gold down again. Gold been in a funk lately because of all the what equity pumping. It can't even find a true value to kind of catch out and go back up and reclaim that $1,500 level because again, the market is so. I don't even know how to say it anymore. It's just so just such an anomaly. You just don't know what. People don't know where to hide money at. Again, so they put it in places like Lululemon and Apple, and again, that's about all I can say. Boeing keep catching the bid, even though it got the most worst news out there on the planet, but it's catching the bid. All this plane gonna be back on the air by this time frame, and this, that, and third, and they just keep saying it, just like Trump keeps saying they're gonna get a trade deal. That ain't happened yet. But Wall Street still flood money into these these speculative talking points with no kind of real tangible clues or real data to back that. So I'm just saying it's a very, very upside down market that's got people convinced that it's right side up, and people are getting more and more entitled to be fed the crack, to be fed the hopium, to be fed the Trump dope. And when that dope run out, all I'm saying is if you didn't got to the point where you're not trusting your real, true fundamental and technical analysis because you didn't got, spoiled behind these pumps of the feds and Trump, you're going to be in a world of hurt. So that's why I kind of want to premise tonight's conversation based upon staying true to yourself and realizing all these different things, and kind of ushering in. Don't get ahead of your skis. Trade what the market's showing you. Don't get biased to the point where you forget that, hey, there's a balance to this stuff. At some point, it has balanced itself out. So you need to, again, be very cautious in your risk value, right? Because it matters. All right. So again, that's just my little take, whatever. But again, do what's necessary for yourself, obviously, but just realize, just be careful out there. Be careful. Again, you got the forex market. Y'all see what the forex market doing for some of you forex traders. I'm sure y'all all over it tonight. Again, the USD JPY obviously, barely up, 0.6%, 0.06%, excuse me. Even though the Nikkei, ain't really doing nothing from the futures equity side of the house, but they're going, that central banker in Japan, that little guy, what his name, Kuroda, whatever his name is. Boy, I gotta say, that's one little wild joker there. Y'all ever check that guy at the central bank of Japan? Boy, that joker, know he can print some fake Japanese money. He know how to pump them markets over there. Their GDP growth value is pretty much rocks like everybody else, but he knows how to pump their market like no other. He doing everything that old dude that just left the ECB, Mario Draghi, should have been doing for the European banks. He doing everything what he should have been doing over there, because they ran them right on up out of there. Because he just couldn't turn their market around. I don't know what he tried everything, but this central banker in Japan, boy, that joker that know he know how to use some ink, boy, he know how to maybe find out that printing press like crazy. He better than Gutenberg ever could have been back in the old days, boy. He'll print some money. He know how to print that Japanese yen. Well, I tell you, I'd be laughing at looking at the little artists and reading up about him too, but whatever. That's my little nerd moments, I guess. But anyway, that's it, guys. I don't got really anything else to share with you guys. I do, again, appreciate you guys stopping by tonight. I'm humbled. I'm grateful. Again, I hope we all, took some away from this, from this build tonight. Again, you're welcome. Again, like I said, always come on to the panel yourself. Share your knowledge, share your value, your wisdom, what you may see in the markets, what may be interesting to you, what may be worth watching. Again, paying attention to. I'm open for it. You always welcome here. This is not a monarch over here. This is a true village mentality. It's a true village think tank. So don't hesitate when I post a link. Come on, share your charts, share your vantage points, share your views of the market, whatever you see that may be beneficial to us. Definitely come on and share it. That's what it's all about. Different perspectives, different ways to look at the market to get to the bag. Because that's the end goal, to get to the bag. Right? No and if buts about that. And that's what we get up for every day. That's what we, again, what we look forward to, obviously, day to day. So be it. So real quick, I throw a couple stocks in there that I'm looking at this week too. Or at least I should say day to day, because you can't even forward think of week outs in this market no more. It's so raggedy. It's hard to even forward think in this market from day to day. So again, obviously we know Aramco, Amarin, AMRN, definitely on watch. I'll post them in the back chat real quick here. Metco, that's another one that's supposed to have some big news just over the weekend. In terms of a biotech stock, them two to look at first thing Monday. Again, the marijuana stocks, again, because this news that just came out that they're going to have this federal legalization vote coming up this Wednesday. So all your marijuana stocks that are really, really oversold, start looking at some of those. So we'll throw them in there as far as Monday to see if any kind of new option volume come in on some of these marijuana stocks. That's the first thing I'm going to be watching, the option contracts coming in. If they ain't really coming in yet, then, hey, it might be ain't ready yet. But that's a good indication of how to make sure, some of these stocks, if they're going to make a real hard pivot, look at the options market, look at the flow charts. All right. Some of you guys know how to do that already. Go to barchart.com. If you don't have that website, you need to have that website archived in your daily arsenal tool belt of things to kind of have to help you assess this market. It's imperative that you have bar chart. Now, I'm just gonna say that outright. If you don't got bar chart, you slipping. You slipping. Right? Because bar chart is one of the it's free. It gives you a real good solid, insight in what the option market looking like, implied volatility, high IVs, all that stuff. You can go in there, diagram it. Same way how we use FinViz, right? The free version of FinViz, right? That's another asset you should have in your arsenal. Let me post it in the back chat. So definitely barchart.com, FinViz, another one you need to have, the free version. You don't have to get the paid subscription unless you want to. That's your choice, right? But you know me, I learned how to use free stuff now. I had, paid subscription, all that stuff. FinViz, BarChart, TradingView. I had the pro package in TradingView paying $300 a year. Man, I said, you know what? I didn't get this far to learn how to use the market at my advantage now. So guess what? I cut my subscription on all that stuff. Same way I cut my cable bill about 4 or 5 years ago. I'm not going to pay no money unless I have to really need it. I know how to use the market for free to get what I need from it. Free dollars, right? Free 99, right? I'm smart, right? So again, my goal is not to make everybody else rich. The goal is to get rich. Unless I'm helping one of y'all get rich, I ain't finna help nobody that already made it get rich. I tell you that. That's just the facts. So FinViz, and there's others out there. Again, y'all know, you'll probably have your own ones you like. Again, I use Black Box. That's obviously I pay for that. I will admit that I definitely use Black Box, right? For the stock option value, it's a great option scanner and also a good equity scanner, also a good OTC market scanner too. But outside of that, hey, free versions, right? Chameleon.com, that's another one. I don't know if y'all have that one. I'll throw that in there real quick too. Let me get that in there real fast. Let me get ready to get off here. Definitely. I'm actually an affiliate of Chameleon too. They hit me up, I guess they followed my little page or seen something. I don't know. Anyway, they made me a affiliate of their company to offer, some of their services too. I hadn't really took the time since they did, to go in there and start to get the service and things that they're gonna offer at a discount. Yeah, I hadn't had a chance to even do it yet. That's what's crazy about it. But when I do, if it's worth it, I'll share it with you guys. But I'm not gonna just say go do it, whatever. But let me assess it first. If I see there's some benefit to it, then guess what? Y'all already know I'm all over it sharing it. If I think it really help you guys, I share my link. If there's a big major discount or worth it, I should say. I'll share it with you guys. Let me get their free link though to their website, because they do a lot of in-depth analysis when it comes to options and earnings calendars. I mean, all that kind of stuff. They're pretty solid. That's y'all probably seen it before too. So I'm probably preaching to the choir, talking to the choir on that. But some of you guys that are kind of still new at this and still learning that, building up your arsenal or your archive or your tool belt. These are some of the great publications I think are great to assess. I mean, there's so many of them, obviously, but these are some of the ones that I've used, and the free versions, obviously, and it has served me pretty well. Right. So hold up, where is that? 1 second. Got it. Archives. Go through all this. Hold up. Man, where is this thing at? One second, guys. 1 second. Again, but outside of that, again, Investopedia, y'all know the basic stuff. Short seller volumes, you want to look at that. Y'all know how to go pull those up. Short seller interest, basically insider selling. That's another one I use a lot. See who's selling stocks. There's been a ton of that lately too. I tell you that. Instead of they've been dumping shares left and right in some of these big stocks because they know they overbought and they're up on fluff as it is. And so I've been following some of those jokers the same way. But again, there's so many things out there. Some of the stuff you guys already know about. So I so there's no real true reason to keep talking about them unless it's just necessary. All right. So yeah, but Market Chameleon is one. Again, earnings, options, stock screeners. The whole breakdown, same way. Really good site to have in your arsenal. Let me post that real fast again. Again, some of you guys already got this stuff. I just put on the earning calendars one, but you can go look at the other stuff once you go in there. So don't get the impression I'm just sending you straight to the earnings side. Another one real quick. Let's do about one or two more. Oh yeah, Earning Whisper. You got to have Earning Whisper, right? If you ain't got Earning Whisper, another one that is really devoted towards earnings. Hey, because y'all know I'm a big earnings trader. I be crushing the earning plays. Or that's some of my, I guess some of the advantages I have of being forward thinking. I've learned how to really, figure out how to, get some of the earning plays in the right direction, and, and hit them up in the option market and do pretty well off of them. So, done pretty well trading a lot of them. Y'all know some of my great ones of late. STMP stamp. We took those from like $20 contracts up to like $2,000. So basically $20 turned to $2,000. 1870 to be exact. I've turned stuff like iRobot from $30 to like $800. God, what was the other one? Like I hit so many of them. I can't keep count. I got screenshots though. I got receipts. But I've taken like $30, $40 and turned it into like $1,700, $1,500 on many occasions, and trading some of these stocks into earnings, through the options market. So again, that's one of my little niches that I have, in my little arsenal. But again, they're very risky. But again, understanding risk versus reward, you know how to trade them once you learn how to qualify some of the data and be forward thinking. That's basically all you're doing when you trade earnings. You got to be very, very forward thinking. Even though it still can go any other way, but fundamental analysis matters, technical analysis matters. Obviously, investor sentiment matters, sector sentiment, the whole nine. Options market, flow chain, what the contracts are. Are they bullish? Are they bearish? Is it at the standstill? Is it going to go nowhere? Kind of like NVIDIA. This case in point real quick. Now get out of NVIDIA. I knew NVIDIA was not going to have no true expansion in earnings. Meaning I knew it was going to move like $20, $30 like people thought it was going to do. Because the option market was pretty much evenly balanced. Puts the call ratio, right? And the stock went nowhere. It killed a lot of earning options because it didn't get any true expansion, either up or down. A lot of people that were buying real far out of the money, them contracts went to zero. And that's exactly why I did not trade it, the options market, for NVIDIA in the earnings, because I knew it was going to do just that. I shorted it outright, right? That was my whole thing. I'm going to short it outright. And it turned out, again, I got some little follow through on it. It came down just a little around about 201, 203. And hey, I got it in. So all that stuff matters too. All right, guys. So that's it. So I think I hit everything that I had slated for tonight. Articles. I think I posted all my articles tonight for some references, which you spoke about. Okay, yeah, the Bitcoin one. God, dog, hold up. Let me just post it up here then. I forgot. I keep having the StreamYard. I can just post it in here. That was the Bitcoin one. Where I already posted the Forbes one concerning the marijuana stocks as well. Blah, blah, blah. That's about everything, I think. All right, guys. So I guess with that being said, I'm going to get ready to get out of here. I appreciate you guys again. You guys are like family. You guys are family. I'm saying like family, but you know what I'm saying when I say that. And so I take all this time, before you guys very serious, and I'm humble as always. Ubuntu, I am because we are. I wish you all, good health, and prosperity, power and profit. Y'all know all my little mantras. Right. But that's it. So again, if you want to, connect with me through other social medias when I'm actually having a chance to be on them. On my Twitter, I got that stuff in the description box. On my Instagram, I'm still trying to build it up. I just started on there not too long ago, but I'm building it up slowly but surely. Facebook business page, African Emporium Office, the We Trade HQ. You want to be a part of the Discord over there, We Trade HQ. You guys know I'm a mentor trainer over there. Hence, I do have the Discord link for the Discord over there in the description box below. The whole family over there, the We Trade HQ. All the guys who obviously support me through it, as mentorees, obviously, but we fellow traders. Obviously, I don't act like I'm some kind of major guru. Y'all know how I am. I'm just African Emporium. But my time is your time. If you invest in me, you got my time. So don't hesitate. Again, call me, hit me up, email me. Again, it's more than just being, obviously coming on here, going to live, but y'all have individual, direct connect to me. So if you see assets out there that you might want to trade or just that personally, If you invested in me, it's my honor to share that, that time, allot that time for you. So don't hesitate. Call me during the middle of the trading day. Email me, whatever. If you need right away, that's what I'm there for. Outside of being able to come on and do live, but that's the whole power in that too. So don't hesitate. All right. So again, the rest of the information down in the description box below. If you missed anything, need anything, it's down there. All right. All right. So that's it, guys. So again, thank you guys for stopping by. Uncle Johnson there. As I always say, I'm going to always try to be back on here like I was before at some point, maybe every other day. If not, if I get lucky to do it every day, it would be great. But we're kind of pretty much near balanced out at this point, a little bit, in terms of my little guy, in terms of all the things we got going on here in my household, obviously. Got some big events coming up here shortly too. In terms of my household, again, y'all know my Iyaba is about to get promoted next month. January. I should say next month because it's already December, but she's getting promoted in December to Lieutenant Colonel. So y'all know I'm just super, super ecstatic about that and elated. Watched her grow literally, since we've been together, something near 12 years, and just her growth and and getting where she's at today is just phenomenal. So I'm in awe about that still to this day. It's like it's just happening, for the first time. So very, very, very great, monumental, catalyst in my household for that. So I'm really looking forward to that in January. I will give you guys, I guess, a little backdrop of it, when it happens, everything. So I'm proud of her. So, hey, we just, a lot of stuff going on, but again, it's all worth it in the end. And I can't say how thankful I am for the group of people I have surrounded around me, like you guys, number one, and then again, my family and things of that nature too, because again, it helps. Right? Y'all know this is odd. This is a very odd, industry being as an investor trader. Y'all know it. It requires a lot of support. It requires a lot of, weird, hours of studying, and just it requires a lot, but it's worth it. Again, I said today, like I said it from the first time when I actually started doing this stuff like full time. It's worth it. The lessons learned, the money earned, the money lost, you name it, it's worth it because again, at some point, for all of us, we're only going to get better. That's what's scary about it. I always tell people that, and they're like, "What do you mean?" I said, "We only going to get better because we got the two secret ingredients." And they're like, "What is the two secret ingredients?" I say, "Due diligence and discipline." That's it. People think it's just some old secret sauce. There ain't no secret sauce to this. It's due diligence and discipline. The better you are in your due diligence and the more disciplined you are, the easier you're going to get to the bag, because those two things are going to govern you in a way where you're going to learn from all your mistakes. You're going to cancel out your weaknesses by focusing on your strengths, and the rest going to be history. Analyze this market in all ways you never thought you possibly could. You may be talking and thinking like a person down on the Wall Street pit to the biggest analyst you may know that's on CNBC, but above all things, you're going to be moving based upon what? Sharp, logical analysis, and not emotions, not fluff, not all this old hoopla and hollering. No, we move on logic over here. We move on proper methodology, right? That's how you get to the bag. That's how you get to the bag in this, right? And so, again, I'm always going to premise that, and I'm always going to stand by that because I know it to be true. I know it to be true, right? So, again, power and profit to you all. I'm saying that with Kevin Hart said with the chest, power and profit to you all. Right? Because, again, that's what it's all about. All right, guys. So I'm going to get out of here, guys. So I'll see you guys in the trading pretty much on the battlefield. Tomorrow, front thing. Some of you guys may be up 4 a.m. Some of you guys may be up 5, 6, 7 a.m., 8, 9, whatever to the pre-market. But whenever you wake up to assess this market, your brother going to be right there beside you in thought, trying to get after it. So strength to y'all and much success and much money that you can ever haul off and hide or whatever. I wish you all the best. All right, guys. See you guys later. Power and profit.